Good morning, everyone. Welcome to day 3 of the event. I can't believe we're here finally. I would like to thank all of our new and returning sponsors for their support of the event. I'd also like to remind everyone that yes, we have another cocktail party today. It's the adieu cocktails later on at the close of today. So although today is our last day, it's actually one of our most important days as we will be welcoming for the very first time representatives of the Newfoundland government. And we will wrap up the day with our very important student sponsorship awards presented by Osisko Mining and Glencore. And it would be great to have everybody in the room to congratulate these young students. And now, I would like to introduce everyone's favorite author and one of our biggest fans, Peter Grandich. Peter, the stage is yours.
Good morning. Come on, I know it's the third day. Good morning. Yeah. All right. So first let me begin by thanking Almighty God for the grace to be here. 18 months ago, I didn't think I'd be standing, let alone after 11-year absence, be speaking at a mining conference again. I also want to thank your host. I let her know in the back I must have done 300-400 conferences over 25 years, literally once a month all around the world. And I've never seen one run better, and I've seen a lot of them run worse. So I would make sure that you let them know that. And the old saying, next year, bring a friend or two, so it could only get better. I want to just talk about 3 topics in the time frame that I have. And I'm trying to see, where is my clock so I know when I'm, oh, I see it, gotcha. I want to talk a little bit about the metals and mining industry because I had left it. And I think by leaving it, I've had a better chance to look at it for those who've been in it and stayed in it to give a real honest appraisal of where it's at. The second thing I want to talk to you about is 5 factors on why this past March I told my clients, I'm still part of a financial planning group just for US residents, on why I felt it was time to build a financial arc. And then finally, I'd like to close and talk to you about the 40 years that I've been in this and what this has taught me. First is to know that from 1988 to 2013, one of my 2 primary businesses was in the metals field. First as a financial advisor, then a portfolio manager of a mutual fund, and 4 hedge funds. I went on to become a newsletter writer. In fact, in the States, I used to write a letter called North of the Border, because I used to think at that time Americans were missing an opportunity to invest, at the time, its biggest 2 trading partners in the world. I went on to become a corporate consultant, but in 2013, I managed again for the second time to lose 7 figures in the metals and mining industry, and I thought maybe it was time to do something else. I was also a sports manager. I dealt with many NFL and NHL players, and I decided that was a lot easier to do, which I thought, than stay in the mining business. So for about 3 or 4 years, I wouldn't even know what the price of gold was on a given day, when I used to know it from the moment I woke up until the moment I went to sleep. However, when I looked at the metals and gold was around 1,200 or something, and I thought that was awfully low, I looked at some of the shares and they were awfully low, even though they got a lot lower over time. And a good friend of mine from Vancouver called up, told me about this deal in Quebec. I think you should get in it. I did. And within a few months, I found another great lesson that I learned about mining. It's all about management. And if you have bad management, you could have a great project, but it's going to be a struggle. And so I became somewhat of an activist and was able to get the president and one other person to leave. And that afternoon, literally after it ran out in these chat rooms, I got a message from this man that was a former major portfolio manager in Canada himself and was a director of a company who was trying to do a deal with that company, and he wanted to speak to me how I managed to get this guy out when he couldn't. So at least for one time I was better than that guy. Probably be the last time. But anyway, this gentleman was very involved here in Quebec as both the director, as an investor, and eventually went back into the money management. And before long, I started to invest, particularly in uranium. Now, I had never invested in uranium even when I was a portfolio manager, because I always thought the market was way, way too small. And there were just too few producers. But the argument, and we were on the verge of this revolution for electricity and electric cars. And so I came very involved in that. And then by talking about it on a Twitter page, which was originally set up just for our clients of our planning group, before long there was 1,000 followers, there were 2, there was 6, there were 8, and going to 10. And so more and more I became involved in it. And I wanted to tell you all that so when I start to tell you now what I think of the industry, you at least understand where I'm coming from. I think there's 3 critical things to understand about mining, and in particular the junior resource industry right now. First of all, it's not anything that it once was. I think you have to accept that. And how I know that is, at shows like this, and all the ones from the Vancouver-based ones that ran through Canada, through Sandy Lawrence's shows throughout the US, to all the ones that went to London and all, at shows like this, there were hundreds, sometimes thousands of financial advisors. He or she built a part or all their book of business around mining shares and junior resource stocks. So you, if you're a junior resource company and you got that person particularly interested, you got parts, if not all, of their clientele. They were the end user. Those were the people that bought the shares at the end. That has become a dinosaur. There may be 1 or 2 here in the room. There may still be a couple at all the other shows. But building a book of business through commission-oriented is a dying art. If it's not dead, it's terminally ill. The problem with that is, along with that, the intermediary person who would get the final interest to a mining company's stock is gone. And even if all those same amount of people who used to buy are still out there, and I don't think they are, and I'll tell you why in a minute, you now have to reach them directly, almost on a one-by-one basis. So from a marketing standpoint, I tell investors in this industry, it's much more difficult for a junior company to find investors, especially on the retail and on the end. And I think I can make that same argument, I won't waste too much time on it, even institutional. Because if you look at all the desks that used to exist, every major brokerage firm that had any type of name in Canada, and even throughout the United States, had what we would call a mining desk. And there would be multiple players on there, including sales folks. Most of those people drifted away for one reason or another, and into one area that really has been the killer to the junior resource market. And what's left there now is perhaps an older folk guy like me. He knows what's talking about. They're not sending him new money, but he holds the hands of whoever may be left. But what really has hurt the junior resource market, and it's going to be a challenge for at least the foreseeable future, is competition. And the competitor by far that beats all others combined is the cryptocurrency market. Now, before you say, oh, this guy's going to talking about crypto, I dislike it so much, I call it Bitcoin. I don't call it Bitcoin. But I will tell you this, even the tulips are jealous of what Bitcoin has managed to do and convince people that somehow it's a worthy investment. And I'm not here because we don't have any time to discuss it, and I don't really want to discuss it because it only causes aggravation for me at this point. But it is a force that has prevented a type of investor that normally would have shown up in some form into this end of this speculation of a market. And those 2 combinations alone are very, very critical to what's happened here. Now, there's a couple other things. Exchange-traded funds. It's good if you're one of the companies in it, but if you're not, it's almost impossible to get what's left of institutional interest, particularly in the US, because of the lack of liquidity and the other thorn to our industry, the overreaction of regulatory views. Yes, it was the Wild West. Yes, I remember standing in front of the guy at Briex a week before a PDC, before he was thrown out of a helicopter. It did change. It was the Wild West, and it did get much better, but there's been somewhat of an overkill to the point where in the US now, even if you have an OTC symbol, most brokerage firms won't even allow their advisors or discount brokers to have an unsolicited order for that stock. That was another marketplace where juniors would find end users and interest. And I also try to tell this to the public at large that may be in here, so maybe you need to ease up yelling at your junior resource CEO, because it's much tougher for them to do the job on the marketing side of things. A couple small little things. I'll talk about metals, and then I'll talk about my building the ARC. The little or no commissions that now exist is critical because it's shrunk the amount of time that a particular shareholder might have stayed with you otherwise. You know, when you used to buy $5,000 worth of a stock and you paid a $200 commission, you didn't trade it for a penny or two. But now with no commission, people have become short-sighted. But where they've really become short-sighted is because of social media, in particular Twitter. There are chat forums, and they get mad. Apparently, Pete owed a couple yesterday because I talked about one of the companies, that where there'll be 50, 60, 100 posts that day, all about what's wrong with the company and all. And guess what? Next day, same thing. Next day, same thing. I try to tell those people, not even IBM has news every week. You can't expect that to be the same for a junior resource company. So too much time spending too emphasis talking about things, create people false impressions, and it's like that game, we're all probably played it. I don't care what country you are from. If you remember when you were in nursery school, whatever, somebody would whisper a sentence at this end, it would pass through 12 kids, and by the time I got to the other side, it was completely changed. And that's what the internet has come, in my view, to talking about stocks and all. The other couple things that I think are important for those of you in the industry, the financial service industry in Wall Street, who, by the way, most of them, you can throw them off the top of the Empire State Building and all the way down, they all say the same thing, hey, so far so good. They hate or dislike metals. And the reason they do, it's kryptonite. Their livelihood is stocks and bonds. So to expect the general financial community to get big believers in gold or anything like that goes against their principle. And I always tell investors, stop trying to turn on Tout TV. All right, you call it CNBC TV, I call it Tout TV, and expect regular people coming on there to talk about metals. It's not going to happen. And here's why I know how unfair they are. Copper went up 25% in 6 weeks. It went from $4 to $5 in less than 2 months. That's 25% no matter what country you're in. That's like the Dow going from 40 to 50,000 in 6 weeks. If the Dow goes from 40 to 50, you'll hear it everywhere and anything. Did anybody hear anything about copper outside of your little world of metals in any financial spectrum? No. And that's why I try to tell people, we work, or if you're involved in here as an investor, we're within an industry that doesn't get the same fair shake from the general financial community that other type of industries do. Quickly about the metals. I was a huge bull first on uranium, then on gold, and then on copper. We've seen the biggest part of this move, but understand this move is beyond anything we've ever witnessed in the 40 years I've been involved. The physical demand so overwhelmed that the paper market, where lots of people played the downside of gold, I've always called them the Crimex at the COMEX. I'm not the first to do it, won't be the last. But the paper market, which used to stymie, stop, or turn around bullish moves in metals, were overrun. They are badly wounded, and I never expect them to be able to control the market again, because the physical interest in the metals now comes out of Asia. It's not out of London, and it's not out of New York. And there, unlike here, or especially in the US, people have such ethnic beliefs in metals and the reasons that they support it. But I think it's a lot bigger. I think the single biggest purpose is, for what I'm going to tell you in a minute, of the 5 factors of why I think you've got to build a mark, is that there are countries been physically buying gold because they expect 2 things. They expect the eventual fall or more deterioration of the U.S., both monetarily and economically and politically, and a formation of some sort of trading among themselves, which I'll discuss in a minute, that will eventually need to offer something more than the competitor does, the dollar, and therefore something of hardness or people can count on. And so I believe eventually there'll be some sort of gold usage in whatever that'll come, and I'll speak more about that in a minute. In terms of junior stocks, I learned a hard lesson yet again. The key to this industry is management. There's a guy I know, he has a very good saying, you can change management, but you can't change geology. And I learned that, thankfully. I had a company that had tremendous geology, but questionable management. That management is now gone, and thankfully, we went from single A management to major league starters. I'll just say to you that you need to look at management as every bit as important at where the project is. Now for me, and I won't get in trouble at this conference because most people who are in the business are basically mining and exploring in North America, but I have limited my personal investments to North America. I'm not going south to Miami, so if they find it in Key West, I'm not even going there. I believe there's too much political and social risk now and other challenges around the world to where 20 or 30 years ago we could have been at a conference, spin a globe, hit our finger on that point in the map and go, yeah, we can go mining there. I don't think that's the case anymore. I do think for the first time that shares will perform as well, if not better, than the underlying metals. But keep in mind, we have a very limited audience. And unless the audience expands, and you'll ask maybe the follow-up would be, okay, Mr. Grandich, how does it expand? One, the eventual recognition and the bubble burst in the cryptocurrency market. I believe it's coming, but it has to happen before we would retain those people. And 2, the general equity market, especially in North America, where people are still mostly invested in it. In our financial planning group, especially when I used to deal with athletes, 98 or 99% of the portfolio was related to some financial asset. Few people have very little exposure to commodities yet, and lower-end mining shares and juniors. As those things change, which I'm hopeful they will, so will the interest in this market grow. Okay, I have 7 minutes to go through the perhaps most important thing that I've ever shared in my career, and that is, it's come time to build a financial arc. For my followers, my clients, I believe there's 5 key reasons. I'm not going to have enough time to go through them. I'll just touch on them. The first you've heard about for years, the debt. But now the debt is at an insane level. We are physically getting to the point where servicing the interest rate and the interest that we're owed in the United States is becoming a challenge. And I know that because finally, both business titans and Wall Street titans are speaking about it. Our Congressional Budget Office says in less than 7 years, we're going to be at $54 trillion in debt. Put a 5% interest rate on that, $2.5 trillion in interest, and know in 2022, America had its best year in revenue, $5 trillion, $300 billion. That'll grow a little, but we're going to see interest expense go almost up to half of everything we take in. And of course, I have a government right now that's killing our best asset. Most Americans don't know, the largest asset the United States owns on its books, 27%, is student loans. What is this current administration doing? It's forgiving some people that have that student loan. Great, you forgave it. That was income that we were going to get for taxes. So what are they going to have to do? They're going to have to raise taxes more to make up for that. Who are they going to raise it up? the idiots like me that paid my kids' college education all the way forward. Big, big problem coming with the deficit. The second is a retirement and aging crisis, and there's a separation. 65% of Americans right now work paycheck to paycheck. They're never going to get to those beautiful commercials where you retire to Florida, you play golf, the wife sits at the pool. It's not going to happen. And they're going to become more and more of a burden because as we get older, trust me, things become more difficult to do. On top of that, and within 2 years, the boomers will have peaked, and there'll be less and less boomers because that's still where most of the wealth is. The wealth will shift to who they leave their legacy to, and those people are going to be the ones most burdened by taxes, and they're going to point to the old guys like Grandich that are then 80 or 85 and want hundreds of thousands of dollars of care from Medicare and say, wait a minute, I can't even put food on my table. You want to raise my taxes again so this old geezer can get some type of medical coverage? No, it's best he go. And somebody says, that's terrible. Governments would never treat seniors like that. Well, unfortunately, both our governments are now. Here in Canada and 3 states in the US, soon to be 7, where old people who are suffering both medically and are basically poor are being encouraged to take their own lives. That's the truth. And I think, unfortunately, it's a sad state, and I think it's only going to get worse. The third is, for us, I call it a foreign economic invasion. The illegal aliens that are coming to the United States, many of these people are just trying to come for a better way. I truly believe that. It has nothing to do political. Yes, some of them are going to be bad people. Yes, there's going to be trouble. But the one thing we do know is most of them are coming with just their shirts on their back. And they're going to need, and are getting at this point, financial support. And a lot of that financial support is going to come from people that otherwise used to get it in other means. And that itself is going to cause a problem. So even building a wall now, if the next guy that was in gets back in and says, well, we got to put a wall. If I'm those people and I'm seeing what I'm having here versus what I had here, not only am I not want to go back, but I'm going to call every friend and relative and tell them I think you should get here too. So a wall will no longer stop it unless the decision is to reverse it and take the people that are supposedly illegal and force them out. This will continue to be a bigger and growing issue and an economic strain that a country that can't afford it. Last two, this is the thing that Wall Street is missing. It's, to me, going to be the biggest surprise to the don't worry, be happy crowd on Wall Street. Their inability to understand what is happening with the BRIC nations. If you don't know about it, BRICS, you better learn about it. It's gonna, when it's all said and done, in my view, it'll be as important to world trade and how it's done as the Industrial Revolution was. And what I say to the novices down, the young financial advisors that stand up and tell me, it's only these countries or whatever, remember, those countries were dealing with the United States economically and using our money. Now they don't want to do either. Please tell me how in the future that's positive for the United States. And finally, the fifth, political paralysis. Now, I'll make a joke. I say it publicly, and I hope I don't offend you, but I believe if Canada and the United States traded their leaders, we both think we got the short end of the stick. So I can't speak to the political paralysis here in Canada, but I can tell in the U.S. it's there. Both parties don't work with each other, don't want to work with each other, don't want to be in the same room with each other. And now they each have a splintering party within them that's moving further away from their middle. And those are the groups that are going to be called upon to supposedly solve these issues when they come acute. Okay, I have 2 minutes, so I'm going to close with this. I've lost millions not once but twice. And I can tell you that I learned a couple of things. Those of us who look into a crystal ball for a living, the only thing we become experts on is how to eat a lot of broken glass. The key to life is what kind of H you're going to wear on your chest. If you're in the financial service business, you tend to wear a hubris H. If you're in long enough and you're fair enough to yourself, hopefully it will change to a humble symbol. The financial service industry has become one big casino. Half the money is in passive funds. It's not actively managed. and the other half, 80% of it's being driven by some sort of computer algorithm program. Less than 20% is what the market was when I first entered, individual people buying into part ownerships of businesses. If you don't understand that, you're just asking for trouble. Wall Street is basically a museum. If you turn on CNBC and you see them sitting there, that might as well be a museum. Most of the trading happens elsewhere. I'm out of time, but I do want to leave you with this. My advice to people, doesn't matter where you are in the world, less is more. 70% of Americans live at least one lifestyle or two above their real true finances. Debt is the dirtiest four-letter word in the world, and it's best to be a live chicken versus a dead duck. And to know that I'm standing here after where I was in the status in my life I need to say these two things, so if I go a few seconds over, forgive me. There's 3 stages in life: going in the forest, and coming out of the forest. The only one that's half fun is coming out of the forest, but the bad news is you already know you can see the other forest in front of you. And in life, there's only 2 types of people: those who are a mess and know it, and those who are a mess that don't know it and don't want to know it. So if you think you're a mess, God has blessed you, and I thank you for this opportunity to have spoken to you.
Thank you. That was a terrific start to the morning, and I'm glad to be here with you today to continue the session. I'm going to go, I think, really quite from the general to the specific in my remarks this morning. I think that the topic I'm going to be talking about is something that I've certainly heard over the past couple of days that there's a fair bit of interest and chatter on, and a lot of it has to do with what the government proposed in this April's budget, as well as in the 2023 budget, particularly with regard to the increase in the capital gains inclusion rate. So let me get moving on the slides here. This is the mandatory disclaimer, which I'll let you read. So I think a lot of people at this conference are familiar with who PearTree is, but I'm going to just give you a little bit of information because it's important to understand how much we're a huge part of the flow-through share market, and the data that I'm going to share with you really comes from dealing with so much of that market directly. So we are Canada's leading provider of exploration financing using the charity flow-through format. Founded in 2007, since that time we've seen a transformation of the capital raising for exploration funding, moving from what we had referred to as traditional flow-through financing to the charity flow-through format. We raise in the range of $500 million annually in flow-through share financing, and that represents the majority of the funding raised on Canadian stock exchanges for exploration. We've completed over 700 transactions, and we are proud to be supporters of over 5,000 charities through the format that we use. So what I'm going to talk about today, leading into, as I said at the outset, comments on the implications of the 2024 and 2023 federal budget measures, is to start off to tell you a little bit about what the flow-through market really looks like. I don't know that people necessarily appreciate where funding is coming from. Then I will talk a little bit about alternative minimum tax and the capital gains inclusion rate, and how the most recent federal budget and the previous one are impacting those 2 things, and particularly the impacts on the mineral exploration sector. And there are a couple of current issues that I want to touch on at the end of my presentation. for anybody that does finance using flow-through funds, I think these are some important things to make sure that you're aware of as we move forward. So the slide that you see up on the screen right now breaks down the sources of funding through equity raises on Canadian exchanges for Canadian exploration. So the aggregate of those bars is all equity raised for exploration on Canadian exchanges. The top lighter colored portion is the non-flow-through portion. So as you can see, the trend or the pattern has been pretty consistent in that flow-through financing funds most exploration in Canada and has been going back more than 10 years that the slide covers. The really interesting trend that you can see when you look at that dotted line on the slide is that the proportion of flow-through financing that's done as charity flow-through financing has increased dramatically over the past decade. And in 2023, the statistics we have show that almost 90% of all flow-through financing was done as a charity arrangement. So when you put all that stuff on that chart together, what we see for the most recent year is that 83% of all money raised for exploration has been raised using flow-through shares. Of that, 89% is using the charity flow-through format. So about 3/4 of all money raised for exploration in Canada is charity flow-through. Now this is where things start to get a little bit more interesting in relation to government policy and the measures introduced in the last two federal budgets. We have data from CRA, the most recent being from 2021, which aggregates on an anonymous basis information from taxpayers and specifically what taxpayers are deducting as their Canadian exploration expense and what credits they're accessing as flow-through share subscribers. So in 2021, based on this data, 88%, over $1 billion of all flow-through funding was provided by 14,400 taxpayers earning $250,000 or more, averaging $74,000 per subscriber. When we look at PearTree's own clients, and so that's about half of that full amount, which is a pretty good sample, obviously. What we find is that the average purchase of flow-through shares is almost $240,000, which translates into only about 2,100 people in the entire country providing almost half of the flow-through funding in Canada, with the remaining 12,000 or so taxpayers who are buying flow-through shares purchasing an average of $45,000 in a year. If you break that down by province and territory, it's not surprising that most of the money is spent in Ontario, Quebec, and British Columbia, which is a good proxy of where the money is being spent, although a flow-through share subscriber in one province may put money into flow-through shares that's spent in another province, but I think that, you know, it's still a pretty good indication. So then, again, looking across the provinces, those three main jurisdictions, in each case, approximately 90% of flow-through funding is being provided by really a handful of Canadians earning $250,000 or more. So with the information that I've just shared with you, we can analyze a little bit in terms of what the likely impact of the recent tax changes and tax proposals by the federal government mean for exploration funding. So I'm going to start, there's really two main things. I'm going to start with alternative minimum tax, or AMT, even though I think most of the conversation seems to be about capital gains rates. AMT is a parallel calculation that applies to high income earning Canadians, and it's intended to make sure that those who could otherwise use not just flow-through share deductions and credits, but whatever is available in terms of deductions and credits in the Income Tax Act to drive their income down to virtually nil for tax purposes. So this parallel calculation is done, and taxpayers are required to pay the higher of either their regular tax or the alternative minimum tax under this calculation. And what AMT does is it limits or denies various deductions and credits to arrive at this other higher number. In 2023, the budget proposed certain changes which included, other than in the usual case for non-flow-through shares anyway, the donation of publicly listed securities could be done free of capital gains tax. The proposal was to increase or introduce a 30% inclusion rather than have a capital gains free donation. And also there was a disallowance of 50% of many other deductions and credits, including charitable tax credits. In April 2024, the federal government announced that the proposed AMT changes would be implemented with retroactive effect to January 1st, 2004. The original proposals in 2023 weren't changed very much. They did, I think with a fair bit of lobbying from the charitable sector, revise the proposal to deny half of the charitable donation claims for tax purposes and moved that up to 80%. But there weren't really too many significant changes, and in terms of the potential negative impact on exploration financing, didn't really move the dial. And then, of course, in April, we had the introduction or the announcement of an increase in the capital gains inclusion rate from 50% to 2/3. That was announced in the April budget to take effect on June 25th, which is, I think, 19 days from now. We do not have any draft legislation. There are, I think, quite a few ways in which the impact on this sector can be mitigated, but right now we haven't seen legislation. We don't even know whether we're going to see legislation before Parliament recesses for the summer, so obviously makes things very difficult in terms of planning. The really difficult thing for exploration financing, which, as you've seen, is largely sourced through flow-through shares, is that there's a phantom capital gain on flow-through shares. So I'm sure many people know, I guess in return for getting an immediate deduction when you purchase flow-through shares, your tax cost base is deemed to be nil. So if you buy flow-through shares for $100 and you sell them for $80 and you have an economic loss, you still have, under current rates, a $40 capital gain. You've got to find the cash to pay that tax somehow. And of course, the proposal is to increase the 50% rate to 2/3. For individuals, we do have a $250,000 threshold. So until you hit that $250,000 point, you still are only including 50% of the gain for tax purposes. Unfortunately for private companies in Canada, there is no such threshold before the higher rate kicks in, at least as the measures have been proposed so far. And that's a real problem, which I think many people don't really appreciate, because there's a very, very significant proportion of flow-through shares that are now purchased by Canadian-controlled private companies. And with the change in the rate, the impact on those subscribers is really going to push a lot of them right out of the market, because they are buying almost exclusively for donation purposes, and the way these changes impact them will will basically eliminate them from the market. So when we put all those things together, estimates are as high as 75% reduction in available capital. A lot of that comes from the fact that corporations wouldn't really be participating. And the really unfortunate thing, and there've been a lot of submissions to government since the budget, and I hope they're listening, is that the federal government has done some really positive things in terms of incentivizing more exploration in Canada, particularly when it comes to critical minerals. And as much as we're hearing lots of announcements about battery manufacturing and electric vehicles and all that, it all starts with finding it in the ground and getting it out of the ground. And it's concerning that something like the critical minerals exploration tax credit that we saw have a huge impact in funding is, I think, really going to potentially be undermined by these changes. I'm not going to go through the numbers, but we did try to do some number crunching and analyze the impact for individual subscribers, and these just illustrate how somebody who would be our typical client trying to achieve the same thing really with the charitable donation objective, how much flow-through shares would they be able to buy before these changes I've been discussing, and after, without having to pay alternative minimum tax. And you can see that the reduction is generally in the 30% and higher range, and that doesn't even take into account that actually the cost to them would be higher, so that could be have a further dampening effect. And then you layer on top of that the fact that corporations are basically out of this marketplace. So that's where those estimates of as high as 70% reduction come from. I think it's still not completely out of the question that we'll see some changes when the legislation is introduced. So I'm pretty optimistic, and one way or the other, the market will settle, and unfortunately we may find that the premiums that issuers of flow-through shares have been able to command may decrease, but we've made some proposals, as well as some others, industry organizations and a few others, which we think will hopefully significantly mitigate the potential impacts that I've described. Lastly, I just have a few seconds left. I did want to just raise a couple of things that I think people should just keep in mind as we go forward when it comes to flow-through share financing. One is that, unfortunately, the federal government did not make any changes as a result of people that were unable to complete their exploration plans due to wildfires, and something completely beyond their control. So just bear in mind that you got to plan for all these contingencies, because we're not getting the relief that the government did provide during COVID when people couldn't get to site. The second is, if you're doing a critical minerals exploration project and you're planning on being able to provide the 30% critical minerals exploration tax credit, there is a certificate that has to be filed with CRA prior to starting the work, prior to the subscription agreements being entered into. And if you don't cover all potential projects that you're going to spend the money on, CRA is taking the view that you can't change where you spend the money midstream. So that can also catch you off guard. And the final thing that I'm going to mention is that before interest rates increase the way that they have, the Part 12.6 tax, which is essentially interest on flow-through money raised in a particular year, if you haven't spent it by the end of February in the following year, was not much of anything for people to be concerned about. But the rate that's being charged by CRA now it's at least 6%, but I think it may be actually a bit higher than that. On the unspent amount that you carry forward from March to the end of the second, or the year after you raise the flow-through funding. So it is like a significant number now. So again, in budgeting for the use of flow-through share proceeds, keep that in mind. So I think that's it for me. But I am going to stay up here. I now have the pleasure of introducing, oh, I'm sorry. Okay, I guess we have a little bit of time. We're going to take a short break before our next speaker comes on. So I will return in just a few minutes. Thank you.
Matthew Gallant to the speaker ready room. Matthew Gallant to the speaker ready room. Matthew Gallant to the speaker ready room. Matthew Gallant.
morning once again. I think we're back on track, and I'm pleased to be able to start off with the first group of presenters for today's Explorers and Developers session. So first off, please help me to welcome Kieran Patankar, President and CEO of Maple Gold Mines. Maple Gold Mines is a Canadian exploration company focused on developing its district-scale gold project in the Abitibi Greenstone Belt of Quebec.
Good morning, bonjour. My name is Kieran Patankar. I'm the President and CEO of Maple Gold Mines. Delighted to be here today to talk to you about our district-scale gold projects here in Quebec. Before I get started, I just want to thank the organizers of this excellent conference. It's been fantastic and always a pleasure to be here in Quebec City. Thank you all for attending. This is just a disclaimer. Forward-looking statements are going to be made. The investment thesis regarding Maple Gold. We're an established 3 million ounce gold resource at Douay and a past producing high-grade gold mining complex at our Jutel mining complex, which was contributed by our joint venture partner. Both of these sit on a significant district-scale land package, which is 400 square kilometers. It's a dominant land position on the Casa Berardi break. The location is fantastic. We're about 2.5 hours north of Rouyn-Noranda by road, located just off the 109 highway, so excellent infrastructure and a deep mining history, of course, in that region. Top-tier mining partner. Can't say enough about Agnico Eagle. We're all familiar with their success in the region over the last couple of years, going way back. We benefit at our size, and given the strategic nature of these projects, there's an incredible level of collaboration between us and our partner, and it's something very rare in the junior space. Again, great infrastructure, and importantly, it's been an interesting year for mining across the board, but particularly for Maple Gold. We've undergone a lot of change, a new management team, and particularly focused objectives. Just to discuss what it is that's so compelling about Maple Gold and our joint venture projects. We're located among the giants of the Abitibi. There are 3 parallel structures in the Abitibi. We're in the one that's in the middle between the Sunday Lake and the Cadillac. What's interesting about where we are is that you've got a splay here in the Casa Berardi Deformation Zone, which we control the entire land package in between the Casa Berardi North Fault and the Casa Berardi South Fault. So there's some very interesting structural features within our land package. Also some parallels here. We've shown obviously Detour and Malartic. There are some very good analogies both structurally and lithologically. But most importantly, there are splays that are associated with each of those as well. So it's interesting just from a significant standpoint to note where we are spatially. What are we trying to do? We've been drilling these projects since we formed the joint venture with Agnico in 2021. The Douay project had its discovery hole drilled back in the 80s. Well-known projects, but poorly understood, to be fair. That was the real unlocking with this joint venture partnership. The goal was to try to take a project where there's a known gold endowment located along a first-order structure and develop it and add ounces that are economic. So we've gone back and refocused and really looked at the generative pipeline across the entire land package and looked at an approach that really is going to advance greenfield projects into more advanced targets. We've got a wealth of past producing high-grade geology that's at Eagle Telbel that has not been explored systematically since the 1990s. And of course, Douay has an existing endowment of 3 million ounces at just over a gram, but lots of resource expansion and discovery drilling potential. Should also say that the entire the resource footprint sits on a postage stamp size of the overall package, and the entire western half of our land position remains largely untested. So lots of blue sky potential, We also have a very exciting VMS project located in the Matogby camp called Morris, which we're going to be doing some field work on this summer. Okay, it's never easy to rethink a project, especially one that has the amount of data and has had the amount of people looking at it that DUE and JUTEL have. I'm a geologist. I'm a geological engineer by training. I've also got a deep background in capital markets. So I take a multi-phase and multidisciplinary approach to, the results, frankly, with Maple Gold admittedly haven't been there for a while. The share price has underperformed. I was appointed as CEO in August to really turn that around, and I think the board and our partner recognize that I've got the skill set to do so. So what did we do? I mean, I took a systematic approach. We've been quiet on the news front because it took time to systematically evaluate the people, the project, and the partner objectives. We found a lot, right? That process unveils a lot. So lots of turnover, inconsistent logging, the usual stuff that happens when, as I said, I'm an engineer, so I think process drives results. And, it just wasn't there. We've optimized and made a lot more efficient what we're doing at site. And the results, of course, of that is that we've got a much better idea of where to go next. This is simple to put into a slide, but it's difficult to execute. And it's been an 8-month process, but it's bearing a lot of fruit. Again, this is a model. We need to vector towards targets. DUE is a complicated system, an ocean of gold, but nobody has kind of unlocked it yet. And largely, when you have the amount of data that we have, unless you're incorporating all of those elements, the lithology, the structural data, geophysics, geochemistry, and coming up with an approach that actually makes sense to vector towards additional high grade and additional volume of ounces to add, I mean, you're missing the picture. You can't just vector off of grade and assays. And so, we've incorporated this approach to vector and improve our targeting. We've got analogs in the region, extensive, obviously many discussions with luminaries that have done successful exploration in the region. Importantly, out of this is DUE and Eagle Talbell looking at structural alteration, mineralization, and various criteria. It ticks just about every box. This is what we started with, right? We started in August. We were looking at the most known area within the DUE deposit, DUE West. There's a head frame there. The shaft was sunk to about 30 meters. Most of our indicated resource is sitting in this DUE West zone. But as you note, there's no geology on here, right? And you've got data, but you're not really using all the data that's available. So what did we do? I asked the team, we turned over the team, we figured out who was going to be there that could actually, we brought modeling in-house. We brought the database management cleanup, all of that in-house. Got a structural geologist in place as a chief geologist, and then we just started doing hard work. Relogging 100,000 meters of core does not happen overnight. You can see here we're doing things after the relogging process as it's ongoing. We've done level plans through the entire deposit by hand, cross sections, long sections, et cetera, and it's resulted in the identification of new zones that are actually real. It's constrained by geology. It's an empirical approach, and now with that result in place, here's the aftermath of all of that work, is that we've got lithostructural layering, we've got all the layers of data, we can overlay it with grade, and we can figure out which areas remain open for drill targeting. Again, we've got zones that have higher than deposit average grade. DUE West is one of them. It's got double the average deposit grade. We just need to vector to figure out where the open areas are and add more ounces. There's already 500,000 ounce endowment here. If we find more that has a very shallow overburden, this looks like a very good starter pit for mining. DUE 531 zone, you've got intercepts on a deposit that's got an average grade of just over a gram. We had an intercept in 2021 in the JV drill program that was 28 meters of 8.8. It's a spectacular drill hole. We got to go find more, but you're not going to go find more just vectoring off of grade because the rocks are highly altered and it's an interesting and complex system. So structural interpretations. I mean, as you can see here, the DUE intrusive complex is sitting here in blue and purple. It sits right between the fault, but putting some kind of understanding of the movement, there appears to be some dextral movement, strike slip on the Casa Berardi North Fault. You've got this sort of delta, these pressure shadows that exist when you're rotating a big intrusive block, as we believe we are here. Interestingly enough, in these pressure shadows, our working thesis is you're creating some additional porosity where you've got potential for gold emplacement, and those two pressure shadows, interestingly enough, correspond with our Douay West zone and the 531 zone. So these are tools that should have always been used for targeting, which we're just now beginning to incorporate under new management and with a new team, and with the strong support of our partner. Again, geochemistry, right? It's a lot of data that's been gathered in terms of multi-element geochem. As our director and technical advisor and one of my personal mentors, Gerald likes to say, you know, all this data doesn't do anything unless it's plotted, right? So what we see here when we actually look at the geochem, you know, you're seeing some interesting things. Most of these zones in green, these represent basalts. And here in the Nika and Douay Northwest zones, you're seeing much more indication of syenite intrusive rocks. You know, what this tells us, it's just used as another way to categorize rocks, look at structure, overlay data, and the geochemistry can be a very effective tool for targeting going forward. So what we've generated and developed with this 8 months worth of effort is a pipeline of targets. Again, it's an ocean of, you know, we've got 3 different styles of mineralization on a single contiguous land package on a first order structure. You've got alkaline porphyry related gold, you've got orogenic overprinting, and you've got a VMS style target and past producing high grade mine complex at Jutel. So we've got a wealth of targets, we know where we're going, and the reason why we know that now with confidence is, and we're going to be ready to drill in the fall and winter, is because we've done the hard work of actually evaluating and reevaluating and rethinking the project. Where are we at in the process? We're about 70% complete. Doesn't mean that we need to do 100% before we start drilling. Some of this work is going to be ongoing, but the core elements of this have been completed, and it's exciting, right? We're ready to go. We're having discussions with our partner actively about which targets we're going to drill first and when that's going to get started. I should also add, you know, I've made some significant improvements with respect to costs. I mean, at the end of the day, all junior mining companies should be fiscally disciplined. Money should be going in the ground. That was not the case with Maple for quite a while. In the last 6 months, you know, with the team's support and effort, and we've gotten the G&A down by over almost 70%, with more reductions to come. So value needs to go into the ground where it's actually going to create value. So that's certainly something, when you look at some of these key elements, you know, where companies seem to be a little bit heavy, we've cut it down to a manageable level. This is the team. We're lean and mean. I wear a lot of hats here, which is great. It's good as a junior company to do that, a junior company CEO. On the management side, between myself, Michael, Josh Pelletier, and Wilma, we do everything. We've got obviously a team in Quebec at site that has done incredible work and helped to build this Rethink program into something that we can hang our hats on. It's great to have an amazing board, right? We couldn't do this without the support of a strong board. Michelle Roth is our chairperson, chair of the audit committee. She's here with me today. She's been with me through the conference, and it's been a wonderful experience working with her. Gerald has got a lot of experience with VMS. I think many of you know him. Maurice is ex-Wheaton Precious Metals. And we've got Paul Harbidge as well as one of our key technical advisors. He's done a lot of rethink and reinterpretation work in the past with Randgold that's been very successful. This technical group has helped me and the team to see the wood for the trees, right? You can easily get lost in all this volume of data. This is our share structure, 340 million shares out at our 6-cent share price today, roughly 20 million market cap. We're trading at about sub $10 an ounce in terms of EV to resource. We've got 2.7 in the bank, 6 million in partner spending remaining through February 1st of 2025. We've got good research coverage. I was instrumental in bringing that in. I've also raised a lot of capital for the company, cleaned up the stock, and some fantastic shareholders. I'm sure some of them are here in the audience today, and we very much value the support of the strong shareholder base that we have, especially while we've been undergoing this major transformation. So just to recap, again, I think as far as asymmetric value opportunities go in the junior mining space, you know, with the partner we have, with the resource endowment that we have, the ocean of exploration potential and blue sky, you know, the leverage of the technical capabilities of both our team and our partners, the cash position, you know, I think we're well situated for, you know, the growth catalysts that are coming in the next 6 months and beyond. And I think it's a very exciting time for us and for shareholders. So we'll look forward to returning some some very interesting news here in the coming weeks and months. Thank you very much for your time. Appreciate it.
All right, moving on. Next, I'd like you to help me welcome Darren Cook, President and CEO of Firefly Metals. Firefly Metals is a junior exploration company focused on discovering and developing high-potential mineral assets with a primary focus on gold and base metals in North America.
Yeah, thank you, Lisa. And just start off by saying it's great that Lisa's actually chairing this panel. We've worked pretty closely with PearTree to access the flow-through system, and can't recommend Ricky and Gary and Lisa and the team highly enough. Thanks for having us here in Quebec City. It's a fantastic location, and I just wanted to present the Firefly story. As you can tell from the accent, we're an Australian-based company. But our assets are in Canada, primarily in Newfoundland. And you know, some people in the room may be familiar with the historic Rambler assets. We purchased them out of administration, and we see a huge future for these assets as a rescaled operation. The potential of these assets is so much greater than what was being recognised previously. And I hope at the end of this presentation you'll understand the scale of what we've got and the potential to really develop this into a world-class copper asset. All right, so what do we have at Green Bay? You know, as I mentioned before, we'll talk a bit more about the province and the location in Newfoundland and Labrador. But the fundamental thing that we have is a resource base that is very high-grade copper, nearly 40 million tonnes at a grade of 2.1% copper equivalent, which is, for those that are familiar with mining, that is very high grade for an underground copper mine. There's already $250 million worth of infrastructure that's been put into place, so that gives us a huge head start in ability to turn this thing on very rapidly. You think about the copper porphyries that are being developed in South America. Sometimes it takes over 20 years to go from discovery through to producing. And given the infrastructure that's already there, we can seriously fast-track the production there. And we wouldn't have bought this if we didn't think there was room to significantly grow that resource. And I think by the end of this presentation, you'll understand why we're so excited about it. Now, I know this session is all about critical minerals, and you know, Canada and Newfoundland in particular are world leading in some of the incentives to get, you know, critical minerals out of the ground and secure supply for first world countries like Canada. And this slide, I won't spend too much time on it because I'm sure other people would have mentioned it during their presentations, but this scares me because, you know, previously in all of human history, they'd mined about 700 million tonnes of copper. If we are to meet all these objectives that the politicians have set in terms of decarbonisation of the economy, electrification of vehicles, etc., we're going to need to mine 1.4 billion tonnes of copper by 2050. That equates to about 300 new mines coming online, and it's going to be very difficult. And one of the reasons we invested in copper is because we could see this huge supply deficit coming, and we expect that to be reflected in the copper price moving forward. Copper has a huge future, and we believe that Green Bay, our project in Newfoundland, is really well positioned to capitalise on that. Other deposits in the world, you've got decreasing grade, you've got reduced discovery rates, you know, the time and cost that I mentioned before to bring into production, mining's getting deeper, and social license as well. You know, we've just seen in Panama, you know, a couple of % of the world's copper supply be taken out because the government didn't support the mining, and that is certainly not a problem that we have in Newfoundland and Labrador. The opportunity that we see is huge, and this is just the Australian copper production in 2022 of all the listed companies on the ASX, and that's where the old Ming mine, which is part of the Rambler assets, would have sat. There's a real lack of quality junior copper assets on both the ASX and TSX. So if people want to invest in copper companies, their choices are very limited. And we think with the upscaled operation, we'd be looking in this range of production, and there are not many other mines in the junior landscape that fit that 50 to 60,000 tonne production profile. And there's not too many that are in the hands of juniors. So we see it as a really niche opportunity for our shareholders to really get exposure to the upcoming copper supply shortages. Now this slide, we did the transaction back in, it was completed in October, and this slide is more about saying how much we've done in that short period of time. We're very impatient people, and we want to try and get this done moving as quickly as possible. But in that period of time, we've got 2 rigs back on site. We've started mining again. We've increased the workforce from 35 people during care and maintenance up to 60 people now. We've mined nearly 1,000 metres of underground development to get our drill platforms in place. We've changed the board, we've changed the name of the company, and we've raised another $52 million that just closed recently to really fund our next phase of exploration. We've picked up more exploration ground, and we've secured access to a port, and that's in the first 9 months. So just wait to see what we've done in 2 years' time, that's all I can say. The company itself, our current market capitalisation is about 360 million Australian dollars, and take a 10% discount on that for Canadian dollars. But the key point with this is that 54% of our register is institutional, and we've just recently welcomed one of the biggest natural resource investment funds, BlackRock, onto the register, and they currently hold about 11.9% of the company. So it is a fantastic result for a company of our size and our scale, and for Newfoundland and Labrador, it's a big tick of approval to have some of the largest institutions in the world invest in this project on the basis of what they see at Green Bay. We also hold 8.4% of Maritime resources, and that was part of the port deal, and look forward to working closely with Garrett and his team at Maritime to unlock some of those regional synergies that we see on the Bayvert Peninsula. So just in terms of the board and management, just introducing ourselves, people in the room may be aware of a company called Bellevue Gold. It's probably one of the most successful Australian gold startup stories in the last 10 years. So they've gone from discovery through to production, and they've just declared commercial production on a gold deposit in Australia that'll do 200,000 ounces per annum. And their market cap's close to $2 billion at the moment. And the 3 gentlemen that are up there on the board are all still on the Bellevue board, and we're all intimately involved in getting that project off the ground. So, we are a team of experienced mine builders. We've worked together for a long period of time. We've just added Jesse to the board. 2 out of our 4 directors live in Toronto, so we are Canadianising the company, and we are looking to dual list on the TSX by the end of the year as well. So, this asset is Canadian, and its roots will be Canadian, and the company is a hybrid Australian-Canadian company. It's not just an Australian ruled by Australia out of Perth. We have a lot of people on the ground here in Canada. And the other thing that I'd like to acknowledge is our team on the ground in Canada. We inherited a first-class team from the previous operators, and it's a pleasure to have our people on the ground here. We only actually have 5 employees in Australia, so it's fantastic to see the Canadian focus. So look, what we saw in this asset, really simple. We saw the potential to significantly grow it and upscale the operation. The mine's ready to go. We can already drive 950 metres below surface. There's already a shaft in place. There's the resource, as I mentioned. There's a small processing plant, but it is too small to operate the long-term future of the operation. The capacity of that plant's only 500,000 tonnes per annum. So you think about it, we've got a 40 million tonne resource through a 500,000 tonne per annum plant. Even if we weren't to add another tonne of copper, it would take 80 years to process that. So, there was a real disconnect between the scale of the infrastructure and the size of the deposit, and that's our ambition, to really correct that imbalance. Got great surface infrastructure. We've got the port facility only 6 kilometres away. But the intangibles are really important. The team on the ground, they're very passionate. They're very proud people. The people of the Baie Verte Peninsula are amazing. They're salt of the earth. They're really hardworking and very passionate about their mine and really want to make it work, and a very strong safety culture as well. This is last year's, and they've just recently updated it, but I can't speak highly enough of the support we've had from the government and how welcoming they've been, and the community. Newfoundland and Labrador was top 4 in the world, and I think that's dropped a little bit, and honestly I disagree with that. Having worked in my career across half of these jurisdictions, and including my home base of Western Australia, I would honestly say at this point in time I would rather be in Newfoundland and Labrador than Western Australia, so I do disagree with the results of the recent survey that had the province drop a little bit, but it's still top 10 globally, which is still a massive achievement. But yeah, can't speak highly enough, and there's actually a panel coming up shortly on the province, and you know, I think you'll get a feel for how great it is to do business there. So look, our key investment thesis, this is a long section of our mine, the Ming mine, and there's 2 real distinct styles of mineralisation. One is a super high grade massive sulphide VMS system, very discrete chutes. They're up to 80 metres wide, anywhere between 10 and 25 metres thick and over 1 kilometre in strike, and there's 4 or 5 of them stacked side by side, more amenable to selective mining. And beneath that we have a bulk area called the footwall zone, and the geometry of that is huge. It's amenable to bulk mining. It can be up to 200 metres in width and over 150 metres vertically, and it averages about anywhere between 1.5% and 2.5% copper, so it is a huge resource there. Now, at 1,200 metres of strike, and you can see in that high grade resource some of the amazing grades that we've got. 9% copper, 2.2 grams per tonne gold. It is one of the highest grade underground copper mines in the world, and you know, that reminds me of a company called Sandfire Resources and their startup deposit. You know, so there's not too many listed companies with copper results like that. And then even in that bulk footwall zone, you can see, you know, some of those intersections, 42 metres at nearly 2% copper, 65 metres at 3.4% copper. These are amazing world-class hits. And what gave us the real comfort that this would grow significantly is in 2017, the old Rambler crew drilled an exploration hole, a parent and a wedge off it, and 460 metres further down plunge, we've got 102 metres, which is pretty much true width, at 1.7% copper. So we know that the ore body continues. So what we've done since we've had the deposit is we aim to prove that the ore body continues well beyond the current extents that we know about. First thing we did was get our mining crews back, and it was really easy to get labour to come back to Baie Verte, because a lot of those guys, after the mine had closed, had gone fly and fly out of places like Voisey's Bay, and they're just looking for an excuse to come back to Newfoundland. So very easy to recruit the staff, and we've already mined 1,000 metres of this exploration drift here, and we're currently at this position here. We've drilled these holes here. We've got 2 rigs underground, and in the next couple of weeks we're moving to 4 drill rigs. So it will be one of the biggest exploration programs in the province. And what the drilling that we've done so far has shown us is the ore body does indeed continue out to that extension down plunge. So what we're aiming to do is get the drilling done here by August, and then we'll put out a resource update which will incorporate another 500 metres of strike of the deposit, and that'll come out in the September quarter, but we're expecting a reasonable size increase there. And then the plan after that is really to move into the economic studies again of the rescaled operation, so a pre-feasibility, then following into a feasibility study. But you know, given that it was an historic mine, it was permitted for what it did previously, we believe there's significant advantages to fast track some of that permitting and get constructing as soon as possible. You know, there's a lot of benefits here having that infrastructure. We've already got a shaft and it's a reasonable size. The decline from the shaft downwards is 500 5 metres by 5 metres already, so you can get decent scale trucks there. You know, the ground conditions are absolutely exceptional, particularly by Australian standards. When you're down 1,000 metres in Western Australia, it can be getting a little bit tricky from some of the stress conditions, but that's not a problem that you have on the eastern seaboard of Canada. And look, all of these things are a massive benefit to getting us up and going. The other thing that the province has going for it is an abundance of hydro energy, and you know, we're aiming to electrify and look at producing a green mine right from the start because of the amazing cost of energy and the abundance of energy in the province. So that's the mine, and that's the key plank of our short-term growth. But long-term, we've acquired another couple of 100 square kilometres of ground in the district, and there are a number of historic copper mines that have had no work done on them that we will drill. And you can see from the government data set, there is a lot of copper showings on that ground. We're redoing the geophysics. The geophysics hasn't been done for a long time. You know, you can just imagine what your mobile phone looked like 25 years ago, and you know, it was probably like a brick walkie-talkie. And you know, geophysics is no different. What we were doing 25 years ago is pretty primitive compared to what we can do today. So we're going over it, investing a lot of money, reflying the electromagnetics, doing downhole EM, doing gravity surveys. And look, the probability of discovering something else there, in my view, is extremely high. So, you know, not only are we focusing on the Ming mine and extending that, but we're looking at the regional context as well. So, look, just to summarise, as I said, we've done a lot of stuff since we since we've owned the asset. We do believe in doing what we said we were going to do, and everything that we you know, planned to do when we acquired this asset, we have done. You know, the drilling's going very well at the moment. We're looking at the resource update in the September quarter, and then the feasibility and economic studies in the first quarter of next year. So look forward to keeping people updated on the project, and look forward to working with all the stakeholders to turn Ming into an exceptional world-class deposit. Thank you very much.
Thanks, Darren, for that presentation, and I swear no money changed hands for the PearTree endorsement. I'd now like to welcome Jose Vizquera, President and CEO of OIII Mining, to the stage. OIII is a Canadian mineral exploration company committed to developing its extensive portfolio of gold projects in Quebec, aiming to become a leading gold producer.
Bonjour, merci pour attendre la présentation. Good morning, thank you very much for being here. 3 days of a fantastic conference here in Quebec City. Très bel endroit pour tout le monde qui est arrivé à Quebec City. Donc, merci pour venir à Quebec City. C'est un excellent endroit pour nous. Donc, OIII Mining, c'est une entreprise plus spéciale, une entreprise que nous avons commencé en 2019. A company we started in 2019. We have been working for 5 years in this company, and we have advanced the project from an exploration project to today, a project that has already a pre-feasibility study, and it's in the verge of commencing the feasibility study. But it's a very unique project, and you will see as we go through the presentation, some cautionary statements here. It is unique, first of all, because we want to be a producer. We were not set only to do exploration and then move along, but really to put it into production. As you can tell by my accent when I speak in French, has the Spanish accent, when I speak in English, the Spanish accent as well. I come from Peru, and my dream has been to be the first Peruvian to build a mine in Canada. As I was a kid, I always saw Americans and Canadians building mines in Peru, Australians as well. But I never saw a Peruvian building a mine outside of Peru, so that's my dream. I want to build a mine in Canada. So we have essentially one major project, which is Marban, and we have a good financial situation at this point. We have around $30 million between investments and cash, so we have enough money to advance towards our feasibility for now. What makes us different from other companies is the fact that we as management have over 5% of the company. It's mostly our family from Peru. And also we have a very strong institutional shareholder basis, including some of the investors from the United States, some others from the UK, and other groups from Switzerland. And we are covered by 7 different analysts. We believe in gold, and if you don't do, you better start believing in gold. Every time that interest rates have been coming down, and we have seen that now with the Canadian bank bringing it down, hopefully it does it very, very quickly because it has been only a little 25 points, or 0.25 points. It will continue to rise, and we have seen this over and over again, which is something that we must pay attention. Gold has been rising without interest rates coming down. Therefore, the possibilities of gold really going higher and higher, it's pretty important. What we do need in this industry, what we need as the juniors, what the majors need, it's mostly money to come back into our industry, and that would only happen at the moment that our profits, the margins are higher. As of today, the margins in the mining space is only between 20 and 30%, Agnico being the only one with 33% margins. 2009, the margins in the mining business was around 100%. So some people says gold is high. No, gold is not high enough. We need to see margins over 50% to have a new flux of investors coming into the mining industry, first to those that are already in production, and then for those like us that are in what Pierre Lassonde calls the killing fields, those ones that has de-risked the project immensely and are just about to rise. So we need those guys to come back. We need gold to continue to go up, and will go up. Don't worry about that part. We're in Val-d'Or, which is one of the prime jurisdictions in the world for mining. More than 100 million ounces have been found between Ontario and Quebec. As you know, geography does not know about politics, so it actually is a very cortical, big cortical structure like the San Andres Fault. Of course, it doesn't go dextral, sinestral like the San Andres Fault, but the Cadillac Lake Braid has been a very important cortical structure that brought a lot of mineralization, a lot of gold. And we are in that part. We have an immense amount of property there, and we have been finding gold, which is more important. We started with 1.6 million ounces, 1.69 when we started this journey 5 years ago. Today we have 2.9 million ounces. We have been adding in an average of 200,000 ounces per year, and there is no reason why we will not continue to keep adding ounces as we continue. The major 2 faults or 3 faults that go through here goes like this. So I'm going to make it in blue. Goes this way, and like that. And we have been working here in Marban, then in Quirens, Nolartic, and we found recently here another space called Malartic H. And lately we have been working right in this area. And one thing that makes us extremely excited is that most of our mineralization has been in here, from this part to there. Mostly are volcanics. Now we have been starting to find mineralization in this area. And these are actually sediments, are very, very similar to the Temiskaming sediments of Ontario, which has been a very prolific area, an area where a lot of gold has been found. Are not the same sediments as East Goldie, but we are finding now gold in these sediments. It's early days, but hey, stay tuned. Maybe we do have something between our hands. Important to mention, these structures, of course, doesn't stop, and they have been part of those structures that goes together to Kina. which opens the opportunity and the possibility for someone like O3 to find mineralization at depth, probably higher grade. Now, of course, we, as a junior mining company, cannot be imprudent, or better said, we have to be very careful on where we spend our money. So we don't want to spend our money in those ounces that are going to be exploited after year 15. Therefore, we are not going to be drilling underground for now. However, we are drilling in all the surface in order to add the most amount of ounces. This project is also important to mention. The infrastructure around us, it's quite substantial. We have in here the guys from Westdome. We have in here Canadian Malartic. It is literally crossing the railroad where we are in order to get into Canadian Malartic, as you can see from the picture. And important to mention, Canadian Malartic is going through a very special phase where they're moving from an open pit, very big production mine to an underground mine, and they have already an infrastructure for 60,000 tons of ore per year. This has been mentioned by the CEO, Amar, so I'm not saying anything that is not public. Everything is public. They will have an excess of capacity of 40,000 tons per day. And if it is true that we all have to work together and the mining industry has to change and we all have to have synergies, then there should be the opportunity for someone like O3 to be able to process our ore at Canadian Malartic, which will certainly de-risk even more the project, because we will not have to build neither a plant or neither a tailings dam. However, important to say, this project as a standalone project works. And this project as a standalone project today at $2,000 gold per ounce generates around $970 million net present value at 5% interest rate. So even if we take 10% interest rate, because you say, well, 5% is too low, well, let's use 10%. 10% is around $400 million. The company is worth $100 million market cap, and we have $30 million in cash. So from 70 to 400, that's a good space there. We will be producing an average of 160,000 ounces, which means that if we see any of the current producers of 160,000 ounces, we could be valued by the time that we are in production in the order of $1 billion. This to show the infrastructure in place, and of course how close we are from our neighbors. And finally, some numbers from our pre-feasibility study that I mentioned them before. At $2,300, we're post-tax $985 million with a 40% interest rate. At $2,000, 726 with a 32% interest rate. This is how we would look if we were in production and where we will be sitting in terms of production versus market caps of other companies. So if we were in production of 160,000 ounces per year, in the very worst case scenario, we will be in the order of the 600, more likely over $1 billion. Which really states where O3 Mining and Marban is and the opportunity. Because you're really looking into a company where you're going to be buying for fundamental value, a company that is worth $100 million with fundamental value of $1 billion, but a company that still has the opportunity of having exploration potential, finding more ore. As part of our strategy, we believe in the strategy of staking districts, of working in districts, of building districts. That's what we did here in Val-d'Or. The first thing we did when we bought the company was buying Alexandria Minerals in order to extend the mineralization and in order to extend our knowledge in the district. And the second place where we have been working has been here in the Casa Berardi area, where we are building our portfolio there and where we intend to do systematic exploration as well. This is part of the results that we have been having in, or results that are from, from previous drilling in Casa Berardi and things that we're going to be following up by July. And this is how it looks in Horizon. And if I can show you where we were before. Horizon is right in here. This is out of those 3 breaks that I show you. This is sort of a new area, if you want to call it, where we have started to see some indications of a different style of mineralization. This is a VMS style of mineralization. This is more copper gold, not only gold. We will continue to do some work there. We have seen some of the exhalites part of the VMS, of the volcanic massive sulfide upper part of the deposit. We have seen some good response from our IP work, and we will be conducting some exploration or some drilling really during the winter, because we need to wait until the area is frozen to go there. So where we have been since we started in 2019, we have been able to go from a PEA to a pre-feasibility study. Part of our catalyst will be starting our feasibility study. We do not want to start our feasibility study until we don't have clarity if we really will be able to work with our neighbors or not. But one way or another, by the 1st of September, we will make a decision and begin, either with a neighbor or without a neighbor, but we will be advancing. We're not going to be standing here without doing anything. We have been working very hard in ESG. We believe that we do have to be different if we are going to be a new way of doing mining. We have to work together. We have to bring the community, the First Nations, the citizens towards the main objective, which is to work and to get the mine up and running. We have been the first company to do Ecologo, which is one of the proposals from the society, the Association of Explorationists in Quebec. We continue to try to embrace and to bring the best talent into O3 mining, and to advance the project and to keep discovering deposits, which is what makes our geologists and myself, particularly as a geologist, very excited. And with that, I will conclude the presentation. Thank you very much for your time, for your patience, and I hope you have learned something about O3. Remember, we are $100 million market cap with a fundamental value of almost $1 billion. Thank you.
Thanks, Jose. So right now I'd like you to help me welcome Gwen Preston, Vice President, Investor Relations of West Red Lake Gold Mines. West Red Lake Gold Mines is a Canadian company focused on gold exploration and development in the prolific Red Lake Gold District of Ontario, with the goal of expanding its resource base and advancing its projects towards production. Gwen?
Good morning, everyone. Thanks for being here. West Red Lake Gold Mines, let's dive into this story. I will certainly make cautionary forward-looking statements. I am in investor relations. It is basically my job to do that, albeit carefully. West Red Lake Gold Mines was born about a year ago when a group of people who are working with Frank Justra to try and find the best asset to start his next vehicle, and that the goal for that vehicle is to become the next mid-tier gold mining company. So they were scouring the globe looking for the asset that they could start with for that vision. And they found it in Western Ontario, in the prolific Red Lake District, and it's the Madsen mine. And the Madsen mine is probably familiar to at least some of you for a couple reasons. Because it's in the prolific Red Lake Gold District, one of the storied gold districts in Canada. It's just down the road from, the mine, the Red Lake mine complex that made Gold Corp into the gold company that it was. So a very storied district. And of course, because the Madsen mine has a recent history that is interesting. That recent history is that the mine was, so first the mine operated from the 30s to the 70s. So that in those years, almost about 2 million ounces of gold were pulled out of the ground from rock that averaged about 9 grams per ton. This is a rich ore body. This is Red Lake. It's a high-grade gold, narrow but high-grade gold. That mine shut down in the 70s just because of low gold prices. The asset went through a few other owners, and then in about 2016, Pure Gold bought the asset, and from 2016 to 2021, they drilled, did a feasibility study, did the permitting, raised the money, and built a mine. And then that mine operated for 14 months and went bankrupt. There are reasons for that are absolutely the next thing that I'm going to talk about. But that bankruptcy meant that the asset went into the hands of the major lender for the construction build, which was Sprott Resource Lending. And that is who West Red Lake Gold did the deal with to acquire the Madsen mine. So in those years when Pure Gold was doing all that work and putting the mine into production, they spent $350 million on this asset. And they did an incredible job selling the dream of a new high-grade gold mine in Canada. They did such a good job that the market capitalization of the company, as it got to first production, went to $1.2 billion. So this thing was a high flyer. Then it failed, which is, of course, the part of the story that I will get to in a moment. We were able to pick up this asset for $6.5 million, so truly pennies on the dollar invested. We also gave Sprott Resource Lending, we converted their debt into a significant stake in our company, and they have continued to maintain that stake as we've financed over the last year. So they're about a 24% shareholder in our company, and they have a 1% NSR. So we bought this thing. It was an incredible deal to buy this asset. The Madsen project, during the sale process, the resource was redone, made a little bit more conservative. So the resource in the main body of the Madsen mine, 1.7 million indicated ounces, grading 7.4 grams per ton gold. A very good high-grade resource that is right within lots of mine workings, like a developed underground mine. And importantly, this picture shows it. There's a huge amount of infrastructure there. The mill is brand new. It works really well. So we got a lot for a very small investment. Okay, so here's some of the pictures of what we got for that investment. I mean, there's underground equipment. There's a double ramp access down into this mine. There's also a shaft down to almost 1,300 meters. That was built in that first iteration of the gold mine back from the 30s to the 70s. They went all the way 1,300 meters down to get to an exciting zone at depth called the 8 zone. I will get to the 8 zone in a minute. And then there's this expandable 800 ton per day mill. There's all the permits. There's the tailings facility. So we got a really significant asset for $6.5 million plus an NSR. This is a picture of the mill. What's really important is a lot of the problems that pushed this asset into bankruptcy when it was operating just a few years ago were about understanding exactly where the gold was, so control of the ore body, understanding of the ore body, how that ore body was mined, mining method, and then how all of it was financed. There was a lot of debt, there was a lot of operating cost pressure. That's a quick summary. The mill that they built, really great mill. So that doesn't require much on our end. A few tweaks here and there, changes to the mill liners, but the mill is a fantastic asset. It was achieving 95% gold recovery during those few years of operations. So we were really, really pleased that we don't have a lot that we need to do with that mill. So what do we need to do? The elephant in the room for sure for West Red Lake Gold is that this mine went into bankruptcy. So why is our team going to be able to do what the previous team didn't? Well, the previous team, they had some great successes making discoveries, delineating discoveries, getting those assets to sort of a PEA type level, and then selling those assets. They'd had a few successes in that part of the mine, discovery to development spectrum. This team did not have deep mine building or operating expertise. In fact, they lacked that in management completely. of course, building a mine is a very technical, complicated, multifaceted thing. So lacking that deep operational and mine building expertise was really the first fault. They ended up in that position of lacking that expertise because they didn't really ever plan to build the mine. They really planned to sell it, like they had with their previous assets to great success. And you can understand that perspective. Red Lake, in the period that they were there, was like a hotbed of M&A. This is when Great Bear was up and coming, and everybody was so excited about what Great Bear was discovering over at Dixie. Evolution had just come in and bought the Red Lake mine just up the road from the Madsen mine. There was a huge amount of interest in this revival of Red Lake as a high-grade gold district. And a lot of suitors came to the table to Pure Gold. And as we've actually learned, even in this conference, we got yet another story of how close Pure Gold was to selling this thing. You know, before the build or during the build, they really almost sold the asset. And that's what they wanted to do. They never wanted to operate the mine. But their marketing actually got the better of them, and the price got too high, and the suitors walked away, and then they ended up having to operate the mine. And because they lacked operating experience, there was some poor decisions made. That was really compounded by the fact that they wanted to get bought, so they tried to build the mine on the very smallest capital budget possible. So if you're trying to build a mine with not enough money and not enough expertise, that's where the interface of those is a bad place to be for building a mine. So let me give you some examples of how that played out. So this is Red Lake. This is a high grade, very high grade, but narrow, nuggety underground gold. You need to drill a Red Lake gold system on probably 6-meter spacings to understand that ore body well enough to mine it. They drilled it on 15 to 20-meter spacings. So then you have a drill hole here and a drill hole here, and there was a presumption that the gold carried on just like this between those holes. That's what the model has to do if you don't have 2 holes in between. But it doesn't. It does things like this. So they just didn't have a good hold of the ore body. They lost control of the ore body. Okay, then they originally had planned to go down into what we call the main Austin zone, which is where that's a 7.4 gram ore body or body of resource. They didn't have enough money. Austin is a deeper part of the system compared to a zone that was right near surface and right beside the mill called McVeigh. So they decided, let's do McVeigh. McVeigh is near surface, it requires far less development. So they drilled McVeigh, but it was a newer discovery, so they really only drilled it on 20-meter spacing, and they developed into it without enough understanding of the ore body, and it's a lower grade zone. The feasibility study that they based all of their decisions on assumed ore was going to get to the mill at an average head grade of 8 grams, or actually got to the mill at an average head grade of 3 grams. That's because they didn't understand where the mineralization was well enough, so they ended up mining waste a lot. They also didn't really choose the best mining methods. They did mining methods that did things like overbreak. So not only were they not specifically mining the mineralization, they ended up overbreaking and also mining waste rock that was around where they thought the mineralization was. Those things meant they ended up delivering 3-gram material to the mill instead of 8-gram material. I think everyone can understand that it costs the same amount to move the ton to the mill and to process the ton. And if it has less than half of the gold in it that you expected, that's not going to work out well for you. So that crux of it was weak. And then there was the cost factor. So because they didn't have enough money in the capital budget, they really tried to push a lot of costs over into the operating budget. They leased as many things as you can lease, and probably some things that you didn't think you could lease when you're building a gold mine, like a primary crusher. They didn't build a building on site. They rented every ATCO trailer that was available. Those costs really add up. And so when you have, and they meant that the operating costs were far higher than the feasibility study or the expectation had been. So less gold, higher cost, that's not a good combination. And then COVID really came on, layered on top of that. It added a lot of inflation. It added all the things that we know happened during COVID. So that really, if there was any rug left under them, COVID pulled it out. What was interesting is that near the end, they brought in some really good people, and they were starting to turn the ship around. The last few months, they were starting, 6,000 ounces produced, which was starting to get in line with expectation, or with what had been planned. So they were starting to turn the ship around, but COVID really just erased that possibility for them to fix it. And so Sprott Resource Lending pulled the debt, and that's how we ended up owning the asset. What's really exciting for us is that those issues that I just laid out, and there are more, but those are some really good examples, those are fixable things. Though the issue is not about whether the gold exists. The gold exists, you just have to drill it on tighter spacing so you have a really good control of precisely where it is. The issue is not that the gold doesn't come out of the rocks. The gold comes out of the rocks very well, 95% recovery out of the mill. Lacking gold or lacking the ability to get it out of the rocks, those are death knells for a project. There were no death knells here. There were management decisions that played out badly and handicapped the operation so that it couldn't work. The team that was working with Frank to identify an asset to build a new gold mining company has very deep operational expertise. And so they're able to come in, we are able to come in and do this. So we're coming in, we're de-risking the resource. By the time we started 2 drills underground, we started drilling back in October. We have 2 drills going underground all the time. We have 100 people on site. There's 2 development crews who are developing into new drill bays so that we can drill this thing to a high level of confidence. So we're going to de-risk that resource, really understand it, and make sure that we have stope-defined mining inventory for a year or 2 before we start mining. We are not going to be scrambling around trying to figure out where the ore is. We are going to know exactly where the ore is before we start mining it. We're doing a test mining project so that we know exactly which mining method to use in the variety of environments that are underground at Madsen. Near to old stopes, fresh rock, backfilled stopes. There's a range of environments. We're doing a test mining program. We're going to do a bulk sample and run it through a sample tower so we can do a reconciliation and give the market and ourselves confidence that the gold is there in the grade that we expect. So that's de-risking the resource. As you de-risk the resource, if you have a good team who are really working in sync, you create a positive feedback cycle where as you start to understand the resource, you can feed it into the mine planning team, who can develop those stopes, who can feed it into the engineering team, and everybody, the whole mine planning process is established on very solid footing. That's what we're in the heart of right now, is understanding every detail of what we need to do to restart this mine. And we are doing that work over the rest of this year. Put out a news release yesterday outlining several of the really significant capital projects that are underway or will be underway soon at the mine, so that when we make the decision to restart, which is the third point here, we have a view to make that decision in the second half of next year, we will truly be able to turn this mine on. The capital, the projects that have to be invested, have to be done on site, we're doing them now. The usual process is, you define the resource, you do the feasibility study, you do the permitting, you raise the money, you start building. We're not doing a sequential process. Everything's happening in parallel. We're starting a connection drift to connect the 2 sides of the mine. We're buying the primary crusher. We're installing a camp. We're doing the de-risking of the resources. We're doing the mine planning. We're doing it all right now. So we will put out a pre-feasibility study at the beginning of next year, but by the time that comes out, a huge part of the work that's needed to get to restart will already be done. Why are we so excited about working on this asset? Well, it's a great asset. It's got those 1.7 million ounces at 7.4 grams, which is a really fantastic place to start. But Red Lake, deep or underground high-grade gold mines have the potential to become much more. And one such story played out just up the road at the Red Lake mine. I mentioned that a little bit a moment ago, but this is the mine, look at these numbers. In 1995, production was 50,000 ounces, right? So it was a good small medium-sized, high-grade gold mine tapping ore that averaged 8 grams. Okay, sure, that works. Then they made the high-grade discovery at depth. And by about 9 years later, the production was 552,000 ounces from ore averaging 77 grams. I'm not saying that that's where we're going, but these systems have this kind of potential. That happened 30 kilometers away in a very similar system. So once you get underground on a system like this, you have the opportunity to look around. You can't do it efficiently or effectively from surface. You can't drill to 1,400 meters depth from surface and efficiently or effectively determine whether there's a high-grade zone. But you can, once you're underground, you can look around and see if that kind of thing is there. So we want to get this thing back into operation. We want to get down so that we can make money, so that we can demonstrate the potential that we saw is real, and so that we can look around and see if we can turn this mine into more. There's some good examples that have happened of this in recent years, great market successes. That's the path that we're going down. I'm out of time, but I would love to talk to anybody who's interested. There's a lot more to say about where we're mining, why we're mining, the kind of expansion potential that is already evidenced, about how there's depth extent for these systems. And it's not just an idea. We have lots of hits that are further down in the system that speak to exactly that potential. So that's what I have to say. Sorry, I'm going to rush through these last few because I totally ran out of time. But the last thing that I want to do is just talk quickly about management. This is a team that's built a lot of mines. Shane Williams has built many mines around the world with great success. They are the reason that this is a possibility for West Red Lake when it didn't happen properly in the previous go-around. Thank you so much for your time and attention.
Good morning. I'm Stephen Sook. I'm an equity research analyst with Stifel out of Toronto, and I'll be the MC for the next session here. Now, please help me welcome Anthony Vaccaro of the Northern Miner, who will be moderating the Trials and Tribulations of ESG panel. Anthony?
Okay, thank you very much. First off, a big thank you to Joanne for hosting such another fantastic event, the third edition of it. I was honored to be here for the first one and all three, and it's been a great joy to watch this grow and become a really important gathering place for the whole mining sector. So thank you, Joanne. Well done. Also, thanks to Joanne for coming up for the title with this panel, Trials and Tribulations. I feel that's very apropos for where we sit these days with ESG. You know, I've been the moderator for the ESG panel for each of the 3 years, and I believe on year 1, we were on day 1, and then on year 2, day 2, and on year 3, we're on day 3. And I think in some ways, coincidentally, I'm sure, but it does kind of track a lot of the sentiment around the topic of ESG. We went from being very enthusiastic in this industry and embracing it and figuring out what we can do, I think to a point of frustration amongst some. And some backlash, of course, from US activist investors. So we're at an interesting juncture. There's still an incredible opportunity here, and this panel here that I'm happy to introduce to all of you is gathered today to talk about what those opportunities are and what we need to do as a sector to make sure that we're seizing them. So immediately to my left, I'm happy to be joined by Alexis Segal. He is Head of Government Relations with Glencore. Thank you, Alexi. Next to Alexi is Heather Taylor. Heather Taylor is VP of Sustainability for Osisko Gold Royalties. Welcome, Heather. Seated next to Heather, we have Jamie Strauss. He is the founder and the head of Digby. And then finally, on my far left, we have Geneviève Morinville. She is the VP of Sustainability for Winsome Resources. Welcome, Geneviève. Okay, let's get into a frank discussion about the topics of the day. Can everyone hear me okay? I know there's a bit of an echo. I just want to make sure that I'm coming through loud and clear to my fellow panelists. As I referenced off the top, there is a large opportunity that continues to be here. But from a marketing perspective, perhaps, ESG, the term is not being embraced with the warm hug that it once was. Is there things that could have been done better on the messaging to around general ESG coming out to the investment community? Alexi, can we start with you?
If you go back maybe 15 years ago, we're talking about sustainability. And sustainability, at that time, there are 3 pillars: economy, social, environment. And we were talking about 4th pillar, that was governance. This was part, I think, of the sustainability. But then, I don't know why it happened, maybe the human brain is not able to handle 4 concepts at the same time, but we took out the economy out of the sustainability to create the ESG. And some people think that the economy is in the social, but in fact, I think what happened is that the discourse expels the economy. And we need to remember that our shareholders, they're not there only to do ESG, they're there to make money. And we took out the economy of the concept. I think that have a backlash effect that we're facing at the moment.
I think that's an interesting point. And some of the surveys I've seen would back that up. When you ask survey investors about responsible investing, over 80% say they want responsible investing to be part. And just having that word investing in there seems to reference that there's an economic factor here and you're looking for a return. It's a very interesting point. Heather, I'll bring it over to you. What's your feeling on this, on where we are right now?
I kind of prefer to not look at it as backward looking and more looking at it going forward. And I think over the past sort of 15 years, we made leaps and bounds in terms of ESG. And right now, I think we're looking at it more as risk management as opposed to anything else. And I think that it's become an integral part of the way that we're investing these days, and it's found its way into management meetings and into the boardroom and into shareholder meetings. So instead of looking backwards, as I said, I think we've come a long way from where we were sort of 15 years ago.
Okay. It's a very important point, I think, and we do want to keep moving forward on this. But before we do, I'm going to look backwards just a little bit, because I personally feel that some of this was around, lots of term that it's not just me. We all know about the term greenwashing. There was a sense that there's a lot of lip service, and what about what things were actually getting executed on the ESG front? I think regulation has a big role to play in that. I mean, we know that, right? Regulation and ESG do go hand in hand. Jamie, can you talk to us a little bit about the role of regulation in all of this? Can it really be done in a way that really helps get true traction, get us away from lip service? Maybe a bit of an update on where we are right now with regulation?
Yeah, I mean, I think regulation has played a big part in the, if I can call it, the movement of ESG or sustainability over the last, particularly over the last 5 years. And I think I think everyone is aware of it now, but there is still a huge amount of confusion. And I think the problem with regulation to some degree is that it's not, or it hasn't been sector specific. And if you look at it from an investor's point of view, rather than a compliance point of view. I mean, I'm very strong-minded that I don't believe regulation in itself or compliance is fundamentally going to change the valuation of the sector. You know, the sector is the most highest cost of capital, the lowest valuation, the most untrusted sector on the planet. Regulation on its own is not going to fundamentally shift that. We're going to remain compliant as a sector, as is pharma, as is banking, as in any other sector. What we need to do is to kind of go beyond that, to begin to get into the heads of the new millennial investors and to give them the opportunity to be able to have a greater level of trust and confidence in the sector in order to be able to make their decisions to employ or to deploy capital in a way that meets their requirements internally. So regulation has been a really important and continues to be a really important part as the pillars of sustainability generally, but we need, not just in the mining sector, but particularly for the brown sectors, need to go above and beyond in order to be able to bring capital back into the sector and to start to deploy it effectively in order to ensure responsible resourcing and development of the mining sector.
Excellent, great points. And I like that you brought up that younger investor, because I feel that sometimes our industry, we're speaking out of both sides of our mouths. On one hand, we're saying, what do we got to do to get young investors into the sector? And then on the other side, we're complaining about ESG and how it's a headwind instead of a tailwind. But really, it matters to that younger investor. Genevieve, let's bring you into the conversation. What can we do? What role does regulation and ESG thinking have to play in strengthening those bonds with different investors?
Yeah, so obviously regulations has a role, but it's very different across jurisdictions. So if you really want to push the boundaries of that across an organization that has different jurisdictions, then you need to probably work towards setting your own standards, and that's where having incentives throughout a company saying, yes, in this jurisdiction, it might be these regulations, but we really want to push continuous improvement at all times. So we're going to look at it from a wholesome perspective to see where can we go next to always ensure continuous improvement. And I think it's important that a company sets its values where it wants to be and then actually deliver on the milestones that it actually is hoping to achieve so that it can always push for excellence. So that's going beyond regulations.
Okay.
Can I jump in here for a second, Anthony? I think from a regulation standpoint for corporates, I think what it's helping to do is act as guidelines for best practices in a space that can be frankly so overwhelming. And then from the investor standpoint, I think what the regulations can do is help with, standardization and consistency and comparability.
Yeah, and I mean, Alexia, you're with a big company, right? There's a lot of things that you have to deal with that a smaller company might not have to do. What is the current state right now in terms of auditing standards, in terms of keeping in compliance? Is it getting efficient? Is it getting better? Or is it still just a big heavy sigh when you see it?
There's a lot of auditing and auditors that audit the auditors and so on. When we are in multiple commodities, you have the copper marks, the gold standard, TSM in Canada that is doing a good job to, I think, audit the ESG performance of Canadian mines. But we need to get some convergence on it because, most of the standards are looking for the same thing. And sometimes we need definitely to make sure that we have, less different standards, so each one of us, we can focus on what is really important. It's not having 5 audits per day or per year, but having one solid, and then we can progress because all this process is built on continuous improvement.
Yes.
That's what we want to reach. It's not really to have a little star in your cahier. It's how can we improve year after year? How can we make sure that all our management is convinced and engaged in improving our environment, social, and governance standards? So that it's not the multiplication of standards that count. It's the rigor in which it triggers the continuous improvement.
Right. And we are seeing, ICMM, World Gold, as you referenced, World Gold Council, Copper Mark, and Mining Association of Canada are converging on standards. They hope to have something out later this year. Jamie, over to you. How much of a difference will that make? How buoyed are you to see what those 4 important associations are doing?
I mean, you've got to celebrate it. I mean, simply anything to remove the confusion has got to be a win. And the mining sector has come together to bring a number of important global standards together to create something which is therefore more consistent and therefore enabled to hopefully, and I think this is an area which maybe others on the panel can talk more to me, is hopefully appropriate for all parts of the industry because there's so much difference between the producers and the explorers, and therefore we'll have to wait to see exactly what comes out of this. But I think at the end of the day, what we need is efficiency, and I think this convergence is efficiency. We need relevancy, whether or not it's at the top to the bottom, jurisdiction-wise, ultimately aiming for best practice, and obviously sector-specific, which this does do. And lastly, we need accessibility. And I think the accessibility is a complex discussion because how do investors use it? How do miners use it? How do we converge those two? How do we ultimately get to where we want to get to, which is more money coming into this sector, which is driving sustainable development and production in order to get more critical minerals out and also supporting other parts of the mining spectrum. And how can we effectively bring that forward with this and other tools, which therefore brings those investors in and highlights confidence.
Okay. I'd also like, sorry, Genevieve?
Yeah, I was just going to add, because you mentioned there's difference between producers and explorers, and in Quebec, the Quebec Mineral Exploration Association, they essentially created standards for exploration companies, and called Ecologo, and at least this is a base and it's fit for purpose for the activities that you're undertaking, but it's at least setting the foundation for later on. If a company was to acquire one of these companies, at least you're trying to set the path forward for being responsible in your activities, and it's even setting standards for the suppliers of the exploration company. So that makes it interesting for us, for example, as a young company, where we're in the process now of trying to adopt all the different standards associated with the certification, and then ultimately there is an auditing process, which then gets me prepared for, you know, a larger company type environment, which has all its own, you know, certifications that you may have to do. But it's at least the core things. It's governance, it's environment, health and safety, community, the importance of having good procurement practices, for example. So it captures what we should be caring about, you know, as you grow into an actual developer. So.
If I could just add on to one thing, I think that's brilliant, because I think so many people come to me and say, does an exploration company really need to worry about this at the moment? And I mean, let's not go on a long-winded story of it, but absolutely, this is the heart of social license. This is where it all begins.
100%.
And if you take it further from that, we can create brands in this sector. You know, there are companies in the industry that have created brands, and there is a management premium that can be put to that. And brands are typically, if you look at it, based on, I mean, if you look at a typical company on the Fortune 500 company, 60% of the market cap is often recognized down to brand value. And this sector doesn't create brands. It has one or two or a few. And the opportunity to create that through sustainability, through good practice and execution, if you were just listening to Gwen on the previous presentation, really kind of nailing in on execution of how we're going to effectively get over the pure gold situation that went on. This is how we create brands, so that there's a consistency to the whole process. And the structure of sustainability operates that, and it begins right at the beginning at the exploration level.
I would argue that OCISCO has created its own brand.
What was that?
I said I would argue that OCISCO has created its own brand.
Yeah.
No
I didn't mention any in particular.
No question about that. But I like that we've moved to exploration, because ESG means it's not a one-size-fits-all. It means different things at different stages of development.
Yes.
We know how critical exploration is. We had the Legends panel on Monday talking about the dearth of money that's flowing into exploration and what the consequences of that are. So let's use that as a bit of a jumping point. Alexi, you're in a unique position here, sitting at Glencore, seeing this whole kind of industry from where you sit. What are some of the challenges at that exploration level? Do you see things with explorers that maybe creates problems for themselves, or things they could do a little bit better to get on top of this file?
The challenge for a company like us is we have systems that are designed for large mines and large smelters and refineries. And when you try to translate those systems in a small team on the ground, they don't fit.
Right.
So that's where it's so important that we infuse I would say, the values of ESG in the teams doing the exploration, and not necessarily the systems that are too heavy. So that's where I think that for a company like us is to pick the right people, so they bring with them the value of environment and social engagement in exploration.
So if those principles are instilled, then that's kind of the baseline for it, and it applies in different situations. Okay, great. Heather, you know, you've had a career where you've spanned a lot, you've done a lot of work in capital markets, so I think you're in a good position for this next one. So I want to switch our perspective just slightly and look at it more as best we can from the perspective of the investor, especially the institutional investor. I'd like to get your comments around how that is evolving, if you've noticed changes there on how investors are thinking about it. And even in relation to now this topic, are investors thinking about ESG differently for different stages of development? How does that look like?
There's a lot there. So I think as a royalty and streaming company, we're in an interesting position, because we have investors in our company, but we are also investors in our mining partners as well, right? But I would say that the expectations from investors are becoming more sophisticated and integral to those investment decisions, and there's no doubt about that. Some things that we are seeing is a greater emphasis on transparency and regular reporting, increased accountability, so a higher degree of ESG into corporate governance and decision-making processes, and then also starting to see the expectations of sort of KPIs and ESG going into those sort of metrics and executive compensation. You're seeing enhanced stakeholder engagement, and that's not just engagement with what they want to see with the local communities, but also the employees and other stakeholders. And then finally, I would say a greater push for not necessarily adoption, but alignment with the global standards like GRI, like SASB, like TCFD or ISSB, and then eventually probably TFND. Not to throw the total alphabet soup of acronyms at them.
Well, that again speaks to what people say is one of the problems, that there is all these
There's
standards.
so many, yeah.
We've talked about convergence with ICMM and MAC and all those ones, but are they moving towards convergence to all those standards you just referenced?
I mean, TCFD is basically dissolved into ISSB, but I think that's what I'm hopeful right now, is that there's a global framework that we're moving towards. And I don't think there's going to be one standard. I don't think that's realistic, but moving towards something that you know, ISSB, S2, I think countries around the world are all starting to adopt.
Okay. One thing that's kind of emerged in the whole ESG discussion is biodiversity. And with the mining sector, it seems to be one that we could have some fruitful discussions around, because we often have large swaths of land and we're only operating on a small part of them. Genevieve, you're in an interesting, Winsome's in an interesting part of Quebec. There's a lot of land there. Talk to us a little bit about maybe what the opportunity or what the trials are around biodiversity.
Yeah, I mean, yeah, we're in a remote environment, so it's nature. I mean, we're in remote environments. We have caribou, we've got, you know, tons of water everywhere, wetlands and all that, so those are opportunities to obviously better understand the entire biodiversity that we have. So it's complex because we have to get in there and actually do all the data collection, but it's an opportunity for us. As I see, you know, these projects going in, we're actually going to be collecting data on all these different ecosystems where nobody has gone in before to collect all the data. So that's really contributing to our understanding of the biodiversity in these different regions. And just, you know, for us last year, for example, we launched, you know, environmental DNA studies, just, you know, doing water samplings across our site, because we were trying to understand proactively where fish were actually around our area, which could help us right away proactively determine, you know, as we're building, you know, towards a potential mine plan, where are the areas to avoid and not avoid already from using those types of technologies, and always constantly have that conversation back and forth with the available tools, and try to really do this in parallel ultimately, versus waiting for something to be done on the engineering side and then saying, you know, this is what's there. So yeah, lots of opportunities in these types of remote environments. So.
Okay. Anyone else on biodiversity, or do we charge on?
I think that's been done brilliantly.
Yeah, well covered.
Well, you know, and one interesting thing, Ecologo, they have a whole as well, biodiversity, that's part of their components. You are given guides and you're supposed to distribute them across your teams, and there's, you know, species, if there's species of concern, it's all listed. So right away at the core, at the exploration phase, people are learning to be aware of the species where they're at, and there's a, you know, an exchange of data that happens, and you know, obviously for us it's caribou, so sightings are tracked, and it's already that understanding of the importance of that is already embedded, you know, from the get-go, which is great. So.
I mean, I was just listening to Andre Gaumond's film about the cleanup up in the north in Nunavut, and it was just so interesting to see the impact of the biodiversity side with regards to the relationship with the underlying First Nations groups up there, and the impact that has happened. So, I mean, I think all of this is so interconnected that you end up improving, or hopefully improving, your social license by bringing all of this together.
Okay, and I mean, listen, reclamation is a big thing that maybe doesn't get talked about enough in this sector. Is there important strides being made on the reclamation front? Alexi, over to you. What do you say?
I think that's something that we under talk about, you know, the importance of reclamation, repurposing of the sites. It's part of our license to operate, or we should say privilege to develop a mine, and I believe that we have very good example to show that it could be done very well, but we need to showcase that much more instead of trying to avoid the discussion of closure. I think the closure discussion should start at the beginning of a project, and you need to bring with you in that discussion the community, the indigenous people, very, very early on.
Is that starting to happen more, or are you still seeing it being kicked down the road?
We do that at Raglan Mine, for example. We have a closure committee that is operating, even if we have 25 years of life at the moment. We still have that committee meeting every year with the community to talk about it, and also to make people, remind them that a mine is there today, providing plenty of, you know, economic spin-offs, but it won't be eternal. And that's part of our social responsibility early on, to explain that a mine is not eternal. And we need to prepare ourselves for the after mining, not only in terms of environment, but also in terms of social impact.
Well, that's a good segue into stakeholder thinking, because an ancillary of ESG talk is often about broadening how we think about mine development and exploration to a stakeholder perspective. And it sounds nice, but oftentimes stakeholders is a wide basket of different individuals with different interests, and those interests can be competing. So at the, not wanting to get into lip service, and Jamie, I want to first come to you on this. That's a very complex thing to really think about stakeholders. How does a mining company best manage that complexity?
How do we best manage the stakeholders? I mean, I think consistency in your communication is, I mean, I'm coming from the angle that I'm coming from. I think this could come from multiple different angles. But consistency in your approach of communication, which is credible, which is future-looking, which outlines the plans of the future, and therefore, obviously, accountability to meet that. So I think from a stakeholder management point of view, I think one of the problems with ESG over the course of the last few years is it's developed and evolved so quickly from a disclosure and reporting point of view that almost without any regulations around it, with the rating agencies, they didn't have any regulation, everything, so it became very confusing. So a lot of people have kind of, from a stakeholder point of view, it is very inefficient in terms of getting that messaging out to the different stakeholder groups. It could be from an M&A and banking point of view, it could be from local communities, it could be to regulators and all of this. So that is it's a minefield, and therefore trying to bring this together in an efficient, credible, communicative fashion, which people can have trust and confidence in on a future-looking basis, I think is really important.
Those principles. Come in, Heather,
yeah,
please.
When it comes to looking at all the stakeholders, I think that's when your materiality assessment really comes in, figuring out which topics are most material, not just to you internally, but having that conversation with all your stakeholders, whether it's your board, whether it's, for us, in our case, our mining partners, whether it's government, it's all of those stakeholders involved, so you really have a good understanding of what is material to you.
Okay. I think our panels here, our esteemed panelists, are all, I think, pragmatists. Would you all describe yourself as pragmatists? No, maybe not. What was that? Pragmatists?
Yeah, for sure.
Because where I'm going with this is, a key part of this is setting internal goals within your company, even outside the standards. And I would think they have to be practical, achievable goals, or we're going to run into a lot of problems. And Heather, I want to come to you stay with you on this one first, and then Jamie will come, and we'll come down the line on this one. What's the thinking on a Cisco around internal goals and how you keep them achievable?
Well, that's a tricky one when it comes to a Cisco, so let's put that aside for just 1 second. And I think when you're setting goals, everybody knows that SMART acronym. You want to set specific, you want to set measurable, you want to set achievable, you want to set relevant, and you want to set time-bound goals. And I think that's pretty standard. When it comes to us, we're in a really tricky position because there's only so much that we're in control of. Right? And so we just came out with our inaugural climate change strategy for 2024 to 2027, and we didn't set a net zero target. We didn't set an emissions reduction target because, a lot of our peers have, and that's great, and it may work for them. But if someone's saying, oh, we have zero scope 1 emissions, we're going to reduce those by 50%. Yeah. Like, what kind of a goal or target is that? And so we struggle. We struggle with, should we set them, should we not? But I think, again, if you're looking at the broader scope of things, then making sure that they're those SMART goals is important.
Jamie, what do you see in the industry? Do you see companies that do this very well? Can you share some examples?
If I may, I'm going to slightly digress, but as a result of this question.
Okay.
So yesterday there was an announcement in the FT to say that $40 billion have been taken out of ESG funds. This sector should celebrate that. And the reason it should celebrate that is because sustainability is now embedded within due diligence. And it's embedded throughout all funds. So if we're going to bring new funds into this sector, particularly with millennials becoming part of the fund management group now and everything else like that, we should be celebrating this because the opportunity to now get mining back into generalist funds. And if you go back to what the legend said the other day on this panel, they asked for more money from government, they asked for higher commodity prices, they asked for shorter permitting, and they asked for generalists. That's not going to sort out the problems of this sector. We have an identity crisis. What we do need to do is to go out to these investors and ask them, what do you need in order to invest in the sector? And that comes back to goals and KPIs and all the rest of it, which is what you're asking for. I'm really excited by that but at the moment we're ineligible. We're less than 2% of funds under management. That is a disastrous situation, but we've got a really exciting future. This is well structured now. I think the convergence of a lot of the regulatory side is really beginning to help this. I think there's much more focus and responsible development and production and sourcing of materials is absolutely for and embedded within all of this due diligence. So we should definitely celebrate. I'm going to finish on a quote from Adam Matthews, who, if anybody doesn't know, Adam Matthews is the head sustainability person at the Church of England. He was the person behind the Tailings Initiative, which I think has really brought this sector into where we are today in a much better way. And he said yesterday is we need to recognize that investors are not properly valuing this sector, and in particular, those companies developing the most socially responsible approaches. Now, if we take that one thing forward, and he's leading this Mining 2030 Commission, that's 90 different institutions across the globe. If he can begin to take this thing forward with some of these KPIs and goals and solutions to go forward, we've got a really exciting future.
Excellent. I love ending. We are out of time, but what a great positive note to end on. Unless anyone had one last thing that they had to get off their chest. Genevieve, go ahead.
I'll just add to what you're saying, because I think right now the opportunity with the critical minerals is to demonstrate to the world that we can do this responsibly. So for us, we went through a self strategy kind of process, and we came out with our mission, defining our mission, producing the world's minerals in the way that the world demands them. And from that comes different values, sharing, it's respect, it's collaboration, all that. And I think it is our opportunity now, I think, with the critical mineral space to demonstrate to the world that we are trying to set exemplary standards in what we're doing. And everybody's trying hard to decarbonize the planet ultimately, but mining is a part of that and a solution. So I think we need to celebrate that and continue to demonstrate that we are trying to do good. So.
Excellent.
Yeah.
Audience, please join me in thanking our panelists for their time and their thoughts today. Thank you very much, all of you.
Thanks. Cheers.
Nice job.
Great. Thank you, everyone, for that great discussion. Would please now help me welcome Kyle Frank, Vice President Exploration of Troilus Gold Corp. Troilus Gold Corp is a Canadian-based mining company focused on the exploration and development of the Troilus Gold Project in Quebec, aiming to become a significant gold producer.
Thanks, Stephen, for the introduction. Hi, everyone. Thanks for being here. I know it's dedicated to be here on the last day. I'm excited to talk about Troilus. We've got a lot to talk about this year with a recent update of our feasibility study that came out about 3 weeks ago. So I'll walk through that, the details of that, what that looks like. For anyone that doesn't know Troilus, this is a past-producing open-pit gold, copper, silver project in the southern James Bay in Quebec. This was operated by Inmet for 14 years, produced 2,000 ounces of gold, 70,000 tons of copper during that time. Inmet was focused on other projects that they had, didn't invest a lot of capital into drilling and resource expansion, and when the mine was exhausted, they moved it to care and maintenance and shut it down. So that left a great opportunity for someone to come in and start drilling this project. We acquired it in 2017, went public in 2018, and we've been drilling pretty aggressively ever since. So we've drilled, at that time, it was really considered a 2 million ounce underground target with resources below the past producing 87 pit. Since that time, we've drilled 300,000 meters, and we've transformed an underground target, 2 million ounces, to 13 million ounces open pit only. So this is one of the largest developing projects in Canada, and we're very excited about the results of our feasibility study. So look at our capital structure. We're in a good cash position right now with $13 million in the bank. We're well covered by the street. We have strong institutional shareholders making up about 65% of our shareholder base. 15% of those are Quebec-based funds, so the Quebec government essentially, very supportive of the project. I'll speak quickly about our leadership team. Justin Reed's our CEO. He's a geologist originally and capital markets executive with over 20 years experience. He founded this company, was part of the team that found the asset and purchased it. Jacqueline Leroux is very experienced in permitting mines, has been through this process several times, is one of the best in Quebec, one of the best in Canada. I'll talk briefly about someone on our board is Eric Lamontagne. Eric Lamontagne was actually the mine superintendent of Troilus when it operated in the past. Very familiar with Troilus, obviously the community, all the stakeholders involved. He's currently the general manager at the Greenstone project in Ontario. Very similar build to what Troilus would be, so a great asset for us to get real-time data coming back to us on costs and all of the challenges that go with moving a project into construction. So I mentioned already we're in Quebec. Don't need to talk about why Quebec's so great. We're about a 2-hour drive from Chibougamau. It's accessed by road. And Chibougamau has a rich history of mining, very supportive of the industry. There's several projects that have operated based out of Chibougamau in the past, including Troilus. So we're in the Frotet-Evans Greenstone Belt. It's just north of the Abitibi. You can see our property in the top right of the screen in the gold-colored claims. The Frotet traditionally is underexplored compared to the Abitibi. There's more till coverage, less outcrop, harder to make discoveries, but very similar rocks, similar age, similar structural controls on mineralization, similar alteration. So leaves the door wide open for discovery. So a closer look at the property, we have 500 square kilometers in the belt, all of which in the greenstone volcanic rocks, all prospective for precious metals. You can see the resource pits sort of in the north part of the property. In the bottom right corner is a picture of the past producing open pits. So it's 2 open pits, 87 and J. They're both filled with water right now. We have permits to dewater, and we're currently setting up the infrastructure to do so. So we're going to kick that off this summer. All right, so moving into the feasibility study now. This is a generational asset, large scale, a lot of job creation in the north of Quebec, 22-year mine life as it is right now. Peaks at over 500,000 ounces equivalent of production. When I'm talking about ounces, it'll be equivalent ounces unless I state otherwise. So gold, copper, silver, about 83% gold, 15% copper, 2% silver. So that's peak production year 7, and then averages about 300,000 ounces life of mine. A couple more highlights. So looking at the economics of our base case, this has an NPV of $885 million and a post-tax IRR of 14%. The 14% I think is really comparable to other projects of this size and scale. We'd see large scale, high throughput, long life mines don't produce a high IRR, so we expected that number. We're happy with it. We think it's comparable to others like any of the other Canadian large scale assets that you see. Here's our gold production profile. So I've mentioned already we peak in year 7. Other than the peak in year 7, we remain pretty constant. There's not a big tail off at the end of the mine life with that 300,000 average. It's important to talk about all 3 metals with this project. We really want to focus on copper as well as gold, along with producing over 240,000 ounces average of gold only life of mine. We also will produce about 17 million pounds of copper. So just under 400 million pounds life of mine. Certainly one of the biggest, would be one of the biggest producers in Eastern Canada of copper. I've already talked about the breakdown of the metals. Just want to also say that we would produce about 75,000 tons of concentrate per year. The concentrate's very attractive for off-takers. We don't have a lot of nasties at Troilus. It's a very clean con, 15% copper, around 100 grams gold, very low lead, zinc, arsenic, all those things that you don't want. Not refractory ore. We get great recoveries, around 92%, and I'll talk about the flow sheet in the coming slides. So the thing about these projects, large scale, high tonnage, they're cash flow monsters. So we're going to average at our base case about 150 million in free cash flow per year for a total of 2.2 billion over the life of mine. At our blue sky case, which was the average metal prices in April, which we all know were excellent, we jump up to about 200 million in free cash flow per year and 3.5 billion over the life of mine. CapEx came in just under 1.1 billion. It's a big number. If you compare it to other projects of our scale, it's actually, you might even think it's a bit low. There's a reason for that. We have a lot of inherited infrastructure from the past operation. We have roads to site, power line to site, 50 megawatt substation at site, and probably most importantly, on the right side of the picture is a fully permitted and constructed tailings facility that's ready for operation. So we value that at about 500 million US, so knock that off the CapEx right away from the start of the mine. We tried to be very realistic in operating costs. We wanted to put out a study that was robust and could stand up to scrutiny. I think we've done that. Our all-in sustaining cost is about $1,100 per ounce and $19 per ton of ore produced. So comparing ourselves to our peers, on the chart on the far right compares us to other emerging producers that have put out studies in the recent years. We're sort of the first one to lead the way in the new post-inflation, post-COVID gold price, like this era. So we're at the highest of that group. I think that's a good place to be. We don't want to certainly come out and say that we're going to be lower than the rest. That's just the environment we're in. So use really realistic prices in our all-in sustaining cost. Quick look at the mine site layout. I won't spend too much on this. We've all seen kind of these before. So the flow sheet. This is something important at Troilus. This is really simple. This is exactly what they used in the past. It's grinding, flotation, gravity circuit, absolutely no cyanide at all. That's something excellent we can boast, especially heading into permitting and engineering. It also takes money off of our OpEx, not having to use cyanide. Like I mentioned, averaging about 92% recoveries for gold, copper, and silver. So not reinventing the wheel. This is proven in the past to work. It's just an optimized circuit, optimizing grind, optimizing recoveries. So I mentioned our large resource. It's about 11.2 million ounces equivalent indicated, 13 million ounces total. You can see here the footprints of our mineralized envelope in red. You can see the resource pit shell sort of in orange and the reserve pit shell inside that in black. So our reserve captured about 7 million ounces of the total resource. There's opportunity there to expand those to bring more into the reserves, but certainly large scale and robust. So we're still a grassroots exploration company. We have 500 square kilometers in the belt. We have teams in the field each year. We're just kicking off our field season this week. We have prospective targets across the belt that we're actively exploring. We're hoping to do a bit of drilling regionally, maybe a few thousand meters this year. So the teams are going to go out and continue developing all of these targets and getting them drill ready. So everyone's interested in the timeline, I'm sure. You can see on the far left of the screen is where we are now with our feasibility study. We're currently working on our environmental impact assessment, which we hope to file by the end of this calendar year. Once that's filed, we're looking at hopefully 10 to 12 months to get all our permits in hand. That's aggressive but realistic. We're working on project financing as we speak, having all the conversations. Like I said, we have attractive con for offtake. We have a lot of levers we can pull with this project, especially being multi-metal. We're on the path to kick off construction, hopefully by end of 2026, early 2027, looking at an 18-month build for the project. ESG has always been a focus of our company. We were the first to be Eco-Logo certified in Quebec. We've recently partnered with Tuglik Energy to work on a pathway to carbon neutral operation in the future. I'll highlight that BlueMetric and Stantec are working on our ESIA as we speak. And just really since the formation of the company, this has been something that has been a main focus of ours. So just to wrap up, summarize, this is a large-scale generational asset. It's going to operate for a long time in the north of Quebec, bring a lot of jobs to the region. In a region that's familiar with mining, that is really looking forward to having a mine come back to the area because they've seen before the benefits that it brings. and the impact on the community. So thank you very much.
Great, thank you very much. I would now like to welcome to the stage Ian McLean, CEO of Avanti Gold Corporation. Avanti Gold is a mineral exploration company dedicated to the acquisition and development of gold properties in Canada.
Sorry. Good morning. Thanks for joining us on the last day of this conference, but before I start presenting Avanti Gold, I really want to pay attention to Joanne Jobin, who's an old friend and a former colleague, one of the people I met when I first joined the business quite a long time ago, and I'm so happy for her success in bringing us all together here today, because it's a great conference and she's done a great job. So I'd like to wanted to start with that. I'm here to present Avanti Gold to you today. Avanti Gold is not that well known a company. That said, this is the disclaimer, of course, that says that what I say may be subject to change. If you want to read it, you can go to our website. We're advancing a high-grade asset in the DRC. When I first started looking at this company and thinking about becoming CEO of it, I was really just driven by the asset. In a previous life, I was fortunate enough to be part of several companies that were born out of exploration, and so I have an affinity to exploration, and in particular Africa, in the sense that I've been part of building projects there, and I'm proud to say that those are very successful. So the snapshot is the Masisi project has 3.1 million ounce resource at 2.37 grams per ton in a 43-101 compliant inferred resource. So that was the first thing that drew me to this project, this company, initially. And then I looked at what was the exploration potential, and it's a 55-kilometer belt that has exploration licenses all the way through to 2045. It's been, we'll get into the details, but it's been had detailed exploration all the way through the belt, and we think that there's excellent exploration upside on this project. The jurisdiction, there's been a recent election. We have a number of people which I'll get into that are very well connected in Africa, and in particular in the DRC. So I wanted to get comfortable with the ability to actually develop this asset in this jurisdiction, and I am very comfortable with that, and I'll show you that in a second. And then the leadership team, in terms of the technical side, in terms of management, is a group that has a lot of experience in the area. So the Masisi project, this is the overview. You'll see in that small box shows you that's the 55-kilometer belt. We own 73.5%. MMG, Chinese company, owns 21% or so, and then the DRC government owns 5% of the asset. We're located south of Bakub and in the province, and the geology is well defined throughout the entire belt. There's higher grade mineralization amongst most of the belt, and there's two significant gold mines which are within the vicinity of the Akianga deposit. project timeline, there's been $30 million spent on exploration. A lot of it was with Casa mining. It was then vended into a private company called Regency, who did an excellent job of consolidating a bunch of the previous owners and bringing this asset to the forefront and vending it into the shell, which is now Avanti. There's a little bit too much detail on this slide to go through specifically, but it's now very well positioned as a one singular asset. So the Akianga deposit is this. The pit shell that you see here contains the 3.1 million ounces at the 2.37 grams per ton that I mentioned. Mineralization is consistent. It occurs as in multiple shallow thrusting veins throughout the whole system. It's open at along strike at depth, and there's the potential to add to this in a very simple re-assaying of 2,100 meters of drilling that's been drilled by a previous company, and we'll do that right away, and that'll be effectively a de facto infill drill program on the project. We plan to do a new infill drill program, or pardon me, extension drill program this year, and I'll go into that in a little bit. So regional exploration, this identifies the belt of 55 kilometers that I mentioned earlier. There's been extensive geophysics, geochem, all the way up and down the belt. And just for perspective, the small two ovals you see there, that's the Akianga deposit itself, the 3 million ounces. There's a small oval you can see that's Akianga East is a parallel structure, and that's about 2 kilometers of this 55-kilometer belt. All up and down this belt, there's been extensive work done, but not by this company. We've done a good job of interpreting historical data and bringing this resource from a JORC resource into a 43101 compliant inferred resource, but we haven't drilled it. And there's excellent exploration potential throughout this project, and these are some of the targets that you see here. It's some of the targets to the south, which I'll identify in a minute, have been trenched, and there's some drilling. In particular, Akianga East, as you see, has had high-grade drill intercepts over pretty good meters in 10 drill holes over from a predecessor company. So the program that I'm proposing is, and I've dealt with our technical people considerably on this, we want to do about 5,000 meters. 2,400 meters would be on the southern extension of the existing deposit. 1,400 meters would be on that Akianga East parallel structure that I identified, and then 1,200 meters on the southern extension of this deposit, which, in perspective, it's between 5 and 20 kilometers down. So it would give us good proof of concept that we have that the mineralized structure are supported by diamond drilling. Logistically, the project is already well suited to immediate exploration. We know that there's good drill rig availability. We know that there's already an existing exploration camp at the project. you know, one of the things about the DRC is that there is a lot of exploration expertise and logistical expertise, and we have some of that are already directly related to our company. And so, you know, when I was looking at this project initially, it's one thing to have such a great asset. It's another thing to be able to actually develop it and move forward with it. And we have that capability, which I'll discuss in a sec. This is this other extension of the main deposit. This would be where we would look to do some of the drilling on the initial program. At depth, I don't have a pointer here that works, but you can see the you can see the pit shell, and you can see where there's been pretty significant grade intercepts of 25 meters of 8 grams at about 300 meters of depth. We're gonna test that. We're gonna test that along the structure, and the only constraint that you see in that gap of the pit shell is drilling. So we think that some of the mineralization will continue at surface. So how do we actually operate in the DRC? That's a big question for a lot of investors. It was answered for me quite quickly. Just prior to me joining the team as CEO, Sam Jonah, who's one of the most renowned African businessmen in the world, or just in general, I would say, joined as chairman, and so that's a critical component of how you can operate in a country at the highest levels. You need local support. You need high-level support like Sam would provide, but to have his name attached to this project in such a small company is a big win. John Hill and Colin Porter are very well-renowned exploration geologists, and I've been in close contact with them, getting a real sense of what the technical side of this project looks like. And I feel very confident that we can continue with the exploration success that previous companies have had. Mata Abatina, he was the former country manager for BHP in the DRC. So we have that logistical side of things in terms of his expertise and bringing together his people that will help us move forward in our exploration efforts at this project. And then on the advisory side, you know, many of you know these names. Paul has been a very successful mining financier. Bob Cross, of course, I worked with in my former business life. He was a director of Bema Gold and chairman of B2 Gold, where I spent the lion's share of my career. And then Martino Di Ciccio, who is effectively my counterpart at Endeavour. We did a lot of mine tours together in Africa. We had cross coverage from many of the analysts. And Martino is now, of course, the CEO of Montage Gold. And he brought me to, it was originally him that I discussed when Avanti was looking for a CEO search. A little bit about mining in Africa. I mean, I don't know. Many people know that Africa is still very, very untapped. The ability to navigate through some of the difficulties on the geopolitical side and the local and municipal components of it are challenging, but we have to go where the assets are, and obviously Africa has presented itself like to that extent. DRC in particular, of course, Barrick made great headway, and Ivanhoe has, in terms of foreign investment and how foreign investors are perceived it's incredibly important to have the government involved in exploring in regions like this, in any region actually. You know, I mean, people look at Canada, Australia, Nevada as stable jurisdictions. At the end of the day, if you don't have support of locals, and if you don't have support of the government and infrastructure, it's gonna be really difficult to be able to be successful. These are just a few of the recent transactions. If you followed any mining in Africa, you'll see that the foreign investment has been well received by the DRC. In fact, I had dinner with a gentleman last night who hosted a delegation from the DRC 2 weeks ago in Toronto, basically promoting foreign investment in the mining sector and foreign investment in general, which is really encouraging. And the fact is, they're open for business. The election cycle has been a recently elected new president, and we feel it's a stable jurisdiction to be able to do business. That, of course, combined with our African expertise. Some of the significant transactions that have gone on here, this gives a little bit of a snapshot of location where our project is in relation to Kibali. There's 2 mines that are already functioning, producing right now. They are just about 50 kilometers north of where we are, and I'm being told I have to wrap up. We're very involved in community engagement. Again, you have to be involved in the community, and you have to be really cognizant of the local people and respectful, and that's the only way you can do business in challenging jurisdictions. This is a project that we just took on. It's a little bit of a diversification, but it's still Africa-based, and we're gonna do some early stage exploration on this. And our share capital situation, we have about 104 million shares outstanding. It's very, very well held in the sense of we're fortunate enough to have a pretty good institutional holding. Management and directors and advisors own a big chunk of it as well. But effectively, at the end of the day, this is a really small market cap company with a very big asset, and we have excellent exploration opportunities and growth for the existing asset that we already have, which many companies would love to have 3 million ounces at 2.37 grams per ton. So with that, sorry, I guess I've gone a little bit over time, but I appreciate your time, and thanks for coming to the conference. And if you have any questions, please feel free to contact me directly. Thank you.
Great, thank you very much, Ian. Please welcome Simon Marcotte, President and CEO of Northern Superior Resources. Northern Superior is a Canadian junior exploration company engaged in the acquisition, exploration, and development of gold properties in Ontario and Quebec.
Oh. Hey, how are you, Steven? You're here. There we go.
Perfect.
They tell us ahead of time.
Great. Well, thanks for having this fireside chat. This is good to see you up here. So
thanks for having me.
I want to start off. You guys recently completed a financing with strong insider support and participation. So can you give a little bit of background on that and who's behind the company?
Sure. So yeah, we did just last week. We closed financing, $8 million, which was upsized from 7. It was good demand, all institutional. It was led by Cormark Securities. Yeah, good insider participation, as you mentioned. So we bought about $1 million ourselves out of the 8. Insiders and management of the company own currently about 25% of the company. So we have written a lot of checks, and we continue to do so. The people involved with the company, you were asking, I think that matters a lot. Victor Cantore from Amex, Executive Chairman. That's the Perron project, one of the biggest wins in recent years. Michael Gentile, also Director, largest shareholder, extremely involved. If you don't know Michael Gentile yet, you should get with the program. Many call him the next Eric Sprott. I think he has a lot of time to surpass that. Also a big shareholder of the company who vended the Philibert property, Mr. Frank Guillemette from Quebec. So he owns a large part of the company as well. And if you're looking for a good trade here at the company, ladies, he's single. You may have to pay for the first date because he's under lockup for a while. But
4 months plus a day, and then
no, it's more than that. No, but we're all extremely passionate with the program. We're an excellent team. On the execution front, we have Adri DeLazar from Detour. We have Rodney from Barrick, Andrew from anyway. So we're very invested and quite excited about what's ahead.
Yeah, that's a great support to see along the way as well. Like you said, great alignment between the team and the project advancing.
100%.
So that's a good lead into the project itself. So you guys are consolidating the Chibougamau Gold Camp. So you give a little bit of a high-level overview of your strategy, and then maybe dive into the assets quickly.
Sure. Stephen, you know me. You know all this probably better than me. But from the window I'm looking out, and the way I look at the gold space, even in recent years where things were tough, there were really 3 big gold destinations that were attracting attention, attracting capital, and stocks performing well. I would say you had Guyana, Yukon, and Finland, right? I mean, Guyana, that's where you have G2, Reunion, Aris, OMI. You're looking probably together at 20 million ounces. Then you have Yukon, 2 camps there. That one is larger. That's where you have Western, White Gold, and several others altogether. The main camps probably have 30 million ounces. And then Finland was performing very well too, where you have Agnico, Rupert, right, in recent years did very well. And you have about 12 million ounces there. Well, the Chibougamau Gold Camp is just on the cusp of joining that group, I think. Because already you're looking at about 10 million ounces altogether. And all these deposits are actually much closer to one another than these other camps that I've been talking about. So there was one problem, though, is that all these deposits were owned by different companies. Right. And all of this needs to be under one roof. It needs to be consolidated so that you can design a unified operation, because all these deposits should really feed the same mill, right? So already you've got about 10 million ounces altogether, and that was the core of our strategy, was to consolidate that camp. And if you go back just 3 years ago, all these deposits were owned by 6 different companies. And now fast forward to today, there's only 2 companies involved. It is us, and it is IAMGOLD. IAMGOLD has the Nelligan project, which was the discovery of the year back in 2019, which has good size. You're looking at just shy of 6 million ounces now. They also have Monster Lake, underground potential a bit to the north, but very high grade, so that trucks well to bring it to the core area. We have the Philibert project, which is only 9 kilometers away from Nelligan. So Philibert, is it a standalone project with the upside that we can provide? Yeah, potentially. But that's not the idea. The idea is really to end up putting the whole thing together somehow. So if you look at Philibert versus Nelligan, we're only 9 kilometers away, right? So if you put a mill in between, you're at 4.5 kilometers. Well, that's basically 4.5 kilometers, basically the pit size of Nelligan. It's basically the pit size of Philibert. So it really, put things in perspective, that all of this really deserves to be the same operation. We also have L'Extraprise, which is the extension of Nelligan. It adds about 1.4 kilometer of mineralization to Nelligan. We have Chevrier that provides, it's a huge, huge system, so that gives you big expansion. So what we have now in the camp is about, together about 10 million ounces. But with the money we just raised and the activity that we're gonna do over the next 7 to 8 months, combined with the fact that now IAMGOLD is turning its attention and turning resources and capital towards Chibougamau as well. And if you look into their last results, the MD&A, they gave an update about what they're doing. So they're currently drilling on Nelligan, Monster Lake, and Anik, which is on the same trend as Philibert. So with the work that they are doing and the work that we are about to start, I am convinced that within 18 months that camp is going to be red hot, because that camp can get very quickly to 15 million ounces plus. And now you're part of these major camps that I was talking about, and you're just, not much more needs to be done to bring it all together, and there's plenty of ways to do that. There's so much value to be created that you can trust the mining industry to find a way to put it together, right? So, and also the ounces that we have, I would argue, increase the value of the camp. Because Philibert has a higher grade than Nelligan. So although Nelligan is bigger right now, the grade of Philibert is higher. So if you start by mining Philibert, you're going to lower your payback period significantly. And that is the main metric, as you know, to decide which mines get funded and which one doesn't. So we're quite excited about what we're putting together. We're going to be very active in the months ahead. So and I would say, like, it's very interesting drilling too, right? IAMGOLD went from 3.5 million ounces to 5.5 million ounces only with 20,000 meters of drilling.
Wow, very.
And there's a lot more than that coming.
So that's maybe a good lead into what is ahead immediately for Northern Superior, and maybe for IAMGOLD too over the next, call it, 12 to 18 months here. Where do you see this evolving?
Yeah, so IAMGOLD, they said they're drilling currently at Nelligan, Monster Lake, and Anik. I think in total, this year alone, they'll do somewhere between 15 and 20,000 meters. With the money we raised, we can afford to do about 20 to 25,000 meter ourselves. And you have a new resource calculation coming at Monster Lake. That was in IAMGOLD's MD&A. We are surely looking to do another resource update, especially at Philibert. And it's very accretive activity that you're going to see, right? Because, well, we are currently valued at about $23 per ounce in the ground. I will point out that just recently, IAMGOLD acquired Vanstar in that area. So Vanstar was the joint venture partner on Nelligan. So IAMGOLD bought that. So that's another indication that they're turning their attention toward the camp. In the press release announcing this transaction, the CEO of IAMGOLD, Renaud Adam, mentioned that their focus obviously is on Côté in Ontario, no doubt, but once Côté is on cruise control, they'll give a lot of cash flow to reinvest somewhere else in Canada.
Definitely.
Well, it looks like this is somewhere else, right? So we're trading at $23 per ounce in the ground. They bought Vanstar for $41 per ounce in the ground. And when we drill at Philibert, the last drilling program that we did, we found ounces at less than $3 per ounce in the ground. And we're confident we can keep adding ounces very, very cheaply, around $6, $7, definitely below 10. So, we raise money, we dilute at $23 with the financing to add ounces at below $10. And I would say $40 per ounce in the ground that IAMGOLD paid for Vanstar is still very cheap. I mean, for a camp that's viable, $100 an ounce is not a stretch at all, right? So, like I said, I think that camp within months is going to become pretty hot.
Yeah, certainly IAMGOLD coming into a lot of cash to accelerate the ounces in the whole neighborhood, which, as you mentioned, is good for yourselves as well. And capital efficiency and scale are certainly important when it comes to developing these brand new camps.
100%.
And just lastly here, you recently spun out the Ontario assets. Can you maybe speak a little bit around the rationale around that and kind of what's ahead for that portfolio?
Yeah, definitely. So we did a spin out of our Ontario assets. The company is newly listed. It's called OnGold, or Ontario Gold. I'll point out that we did not distribute those shares, right? So Northern Superior still owns 72% of OnGold, right? Ultimately, for sure, there's always a good opportunity to do the right thing. We can eventually dividend out those shares to the shareholders. But it's not something we wanted to do right now. It's a new listing. The company is not liquid. If we distribute those shares, it'll hurt the stock price. So this OnGold company, newly listed with the financing at 51 cents a share, the stock's trading around 70 cents. And it has the famous TPK project. So TPK is the largest gold and teal anomaly in North America and potentially the world. So that's just small grain of gold that's in the ground. We feel pretty confident that we've identified the source of this. There's drilling that came out 25 grams over 13 meters.
Wow.
So it really has a legion of followers people are highly passionate with this project, and that was the reason why we did a spin-off, right? Because the company, we couldn't chase too many things at once. We needed someone that had we needed a company that had its own capital, that had its own management team. And when it comes to Ontario, I'll say this, so TPK is not different from the rest of Northern Ontario. Everything is about the First Nations and the social acceptability and doing the right thing with the local communities. It is very difficult, and there's a lot of issues in Northern Ontario. So what we've done, and the OnGold company we've put together, we realize that, and we know that 90% of the value of the project is based on not the geology, but with social acceptability and the relationship with the local community. So if you look at the management we put in place, the CEO is Kyle Stanfield. He's the guy who permitted Rainy River, interestingly, discovered the same way, permitted Musselwhite, has very good relationship with a lot of different communities. And he was able to convey that we mean what we say when we say that we want to really make the local communities our partners. The chairman of the company is Mr. John Kim Bell, who is Indigenous himself. He was actually born on the South Shore of Montreal. His life story is absolutely amazing. I'm going to invite you to read his bio. So Mr. Bell started as a musician, as a conductor, became a conductor of the Toronto Orchestra, then became a conductor on Broadway, toured the world with rock bands like the Bee Gees and that sort of thing. Moved to the corporate side of things, handled the First Nation affairs for companies like Hatch and Glencore. He sits on the board of many very high-profile entities, such as Ontario Chamber of Commerce, Canadian Broadcasting Corporation comes to mind. And then he went into philanthropy, raising money. He sent tens of thousands of Indigenous kids to college. So, a very colorful career, and he's now chairman of the company, because really what we envision for OnGold is to do the right thing when it comes to social acceptability, and then take advantage of projects that can be very cheap because they are in bad situations because of that.
Definitely an asset to have that sort of gateway and access.
Yeah.
Well, thank you very much, Simon. We're out of time here, but I really appreciate the chat and letting us all know about Northern Superior's path forward.
I'll keep you posted.
Great.
Thank you very much.
You.
All right, thank you.
Next up, we have Mike DeRose, President and CEO of Lavras Gold Corp. Lavras is focused on the exploration and development of its Lavras do Sol project in Brazil, a highly prospective new gold district. Please help me welcome Mike.
Thank you, Stephen, for the introduction, and thank you, everybody, for joining us for the Lavras Gold presentation. I'm very happy to be here. Our focus at Lavras is gold exploration in southern Brazil. We basically are a relatively new company. We went public in April of 2022. We were spun out of our predecessor company called Amarillo Gold. At the time, Amarillo had two assets. We had basically a shovel-ready gold project in central Brazil called Mara Rosa, and we also had our Lavras de Sol gold exploration project in the south. Hochschild's bought Amarillo Gold out primarily for the shovel-ready project at Mara Rosa. So what we did was we were spent out with $10 million in cash. We created a 2% revenue-based or net smelter return royalty on all the exploration ground surrounding that Mara Rosa project. And we had about 500,000 ounces of gold resources down at Lavras. So our strategy was to get 2 drills on site down and mobilize them down to Lavras. And we've literally been drilling every day for the past 24 months or so. We have made 6 new gold discoveries since that time. Including our Fazenda de Posto discovery, which has got the market excited. And we have actually doubled our gold resources now to about 1 million ounces in 2 of 24 projects on our property. Happy to say that in the short 2 years that we've been a public company, we were actually recognized as one of the top 50 performing companies on the TSX Venture Exchange last year, based on share price performance, increase in trading volume, and market cap increase. So a real testament to the fact that you can actually create a lot of value through very focused and technically based exploration. Our real goal at Lavras is to demonstrate that we have an economically viable gold project on our property, and that will kickstart the district, as they say. For those of you who are not as familiar with Brazil, it's a jurisdiction which is very much similar to Canada in the sense that it's a natural resource-based economy, both in terms of agriculture as well as mining. Vale is the second largest iron ore producing country or company in the world. And a consequence of that is that they have a very well-defined process from going from mineral exploration through to mine development and ultimately production. Specifically in terms of the gold mining industry, Brazil ranks 15th in terms of gold reserves and resources. And there are 2 companies that are actually building and have built over the last couple of years 2 gold mines to production, one being a Montreal-based company called G Mining, who many of you are probably familiar with. They have a project called Tocantinzinho, which will go into production in the back half of this year. And then Hochschild's Mining, who bought out our predecessor company, and the Mara Rosa mine. That mine has actually gone into production about 8 weeks ago, should be in commercial production this quarter. In terms of our share price performance, as I mentioned, we went public in April 2022, and during that time we made 6 new gold discoveries. You can see that the share price really didn't react for the first 18 months or so, even though we were making what I consider to be pretty good progress. However, in September of last year, we put out a fairly significant drill hole. It was 340 meters of 1.1 grams per ton gold at our Fazenda de Posto discovery, which is literally about 150 meters to the northwest of 500,000 ounces of gold at what we call Buchia, which is a near-surface gold deposit. As a consequence of that share price move, we were able to complete a non-brokered private placement. We raised $13.7 million at $1.35 a share with no warrants. So we've been able to keep our capital structure really tight, which I think is really important. Currently, our market valuation is about 80 million Canadian. We had about just under 10 million in cash as of March 31st. And during our financing, I brought in Kinross for 5% of the company. Many of you may be aware that Kinross is actually the largest gold producer in Brazil at their Paracatu mine. They produce about 500,000 ounces of gold a year. And they are, the masters of mining big open pit, low-grade type deposits. Also brought in Rob McEwen, a very well-known gold mining investor based out of Toronto. and management and insiders are about 28% of the company. So tight capital structure, good long-only type of shareholder register, and I think that's gone a long way to supporting our share price performance. Now moving into the fun stuff, our project, where as I mentioned, our key focus is in southern Brazil. Basically, there's about a 2-hour flight from Sao Paulo to the south to the port city of Porto Alegre. That's a very large city. It's about 1.5 million people. It's the capital of Rio Grande do Sul state. And you drive by tarmac roads, very similar to what's in this photo, to our project. It's about a 4.5-hour drive. I should mention that the flooding that you've seen in Brazil over the last month or so actually happened in our state, in Rio Grande do Sul state. Porto Alegre did get hit pretty hard, but things are starting to get a little bit better from what I've been told. But for example, the airport there was shut down and probably won't open until about September. So there are some logistical challenges. Our property down at Lavras was impacted really just to the extent that we got a lot of rain, so we had to shut down our drilling for about a week or so, but we're pretty much back on track and drilling again now. Most of our team is from Lavras do Sul or surrounding areas. That's really important because it creates a good social license to ultimately build a mine in the area, and certainly we're getting a lot of support from the local community. Very quick word on geology. We're dealing with what we call an intrusive hosted gold system. And so this is just really a picture of a volcano, and you can imagine if you're just looking at that magma chamber, essentially what you're looking at on our property are the remnants of that old magma chamber. The rocks we're dealing with are about 590 million years old, so they're what we call Neoproterozoic. So the question is, why is that important? Well, it's important because these types of mineral systems or gold, copper systems can be very, very large. So I've given some examples in this slide. Porgera, Cripple Creek are in the range of 30 million ounces. Olympic Dam, which is an IOCG deposit with uranium and copper, actually is one of the largest gold deposits in the world as a byproduct, over 100 million ounces. To provide some perspective, the average gold deposit size is about 3 million ounces, and when you pull out these very large monster gold deposits, the average gold deposit size is actually close to 1.5 million ounces. So they're big targets. You can see physically these deposits occur from anywhere from 3 kilometers to maybe 6 kilometers in dimension physically. We actually have gold and gold-copper anomalism over an area of about 11 to 12 kilometers at Lavras. So it's a very large mineral system. Obviously, the key for us is to figure out where those economic concentrations of gold, in our case, are. This circular feature is what we call the Lavras do Sul intrusive complex. If you're sitting in a helicopter looking straight down, basically that's the remnants of that old magma chamber that I'm talking about. And it's about 11 or 12 kilometers in diameter, so very, very large. We've completed a lot of regional exploration work. We've done regional drone surveys, which gives us good information on the structural setting of this area. We've also completed a lot of regional soil work. So those large kind of red, green, and yellow areas are kilometer scale golden soil anomalies. All of those labels that I'm showing you here on this diagram are old workings that the Portuguese worked in the late 1700s when they arrived in Lavras. And so they're old trenches, pits, tunnels, that sort of thing. We know where they are. And you can see a lot of these gold anomalies are centered on those old workings. The red sort of feature in the middle of the intrusion is actually the town of Lavras. It's about 7,000 people. So from an infrastructure perspective, we can get to our targets within 20 minutes to half an hour just driving. The other aspect of what we've done is we've consolidated our land package. So we've got about 22,000 hectares of contiguous, the keyword being contiguous claims. So we cover all the favorable geology. And as I mentioned, we've actually made 6 new gold discoveries, as shown in the white labels, and reinterpreted one called Candelera, which is a kilometer scale gold structure that was discovered in 2007, 2008 by Amarillo. But we have 1 million ounces in 2 of these 24 targets that I show here. One of the things that's coming out of our work, and everybody asks me, what's the grade? What's the grade? Well, we have a lot of different grade depending on the targets because the geology is actually quite variable and complex. but we have what we call low-grade disseminated bulk tonnage style of mineralization, such as what we're seeing at Boutia, Fazenda de Posto, Matilgi, for example. But we also have what we call very high-grade bonanza-style visible gold in a kind of quartz stockwork style, where we're getting things like 4 meters of 43 grams per ton gold or 3 meters of 28 grams. So there's a lot going on here geologically, and it's complex, but that geological variability will ultimately translate into what I call mining flexibility, so you can start to optimize the economics of these projects over time. This is our Boutia project, kind of a plan view, again looking from a helicopter down. It's about 500,000 ounces, about 1 gram per ton or so, but right at surface with no overburden. What we're doing here with our 10,000 meter drilling program that's underway is tightening up that resource and looking to expand it. We're finding some very higher grade mineralization sitting right at surface, such as hole number 16, where we hit 154 meters of 1.1 grams per ton gold, and with that, within that 109 meters of about 1.4. So we're optimistic that we're going to find a higher grade core right at surface, which will obviously enhance the economics of the project. Fazenda de Posto discovery, the 3.5 football fields of gold mineralization that we found, is literally located about 150 meters to the northwest of this Boutia discovery. So you can see what's starting to happen. We've got over 500 meters of strike length so far of mineralization, with Boutia sort of sitting there hopefully with an open pit sort of starter, and then working your way to the northwest towards Fazenda de Posto. This is a west-facing section sort of showing Fazenda, the discovery hole number 2. You can see that we actually hit about 114 meters of what we call cap rock, and then we got into the yellow rock there, what we call the epicyanite, which is hosting the gold, with a higher grade core, 160 meters, 1.8, developing at depth. Since that time, we've scissor holed to confirm the discovery, and we've drilled laterally, so we've got an area of about 200 meters in aerial extent, and we've actually drilled this thing down to over 400 meters vertical now. So it's developing into something nice, but we have a ways to go to understand it completely. Wanted to just show you, they say a picture's worth 1,000 words, so here's sort of 4,000 words worth of pictures. But it really just shows the transformation of these original fresh granites, the original magma chamber, if you like, into the mineralized gold rocks at the bottom right-hand side. So it's really an aggressive chemical change of these rocks, and it's opened up a lot of exploration opportunities for us in terms of our geological thinking. This is an oblique view looking at Boutia, Fazenda de Posto. You can see we've drilled Boutia down to 300 meters and Fazenda down to about 400 meters so far. And just to provide some perspective here, Boutia and Fazenda de Posto are actually located in the sort of bottom left-hand side of this diagram. And you can see we've got these kilometer scale kind of gold and soil anomalies along the western edge of the intrusion. So a lot of targets to continue to explore. But what we're going to do is try and understand what we have at Boutia, Fazenda de Posto, and start de-risking it. And we'll continue to explore these other targets to really try and understand what we have. I think ultimately, conceptually, what you'll find at Lavras de Sol is that you're probably going to have some kind of a centralized mill or processing facility when you'll be feeding this mill with various sources of gold over a long period of time. So a lot of work to do, but it's quite unique for a little junior company like Lavras to be controlling basically a district scale exploration opportunity like this. And lastly, I just wanted to mention that we actually created a royalty, a 2% royalty on this Mara Rosa project in central Brazil. So we're now moving up to the central part of Brazil here. That royalty is a 2% revenue-based royalty on about 65,000 hectares of regional exploration ground. That's shown in the gray on the slide on the figure on the left-hand side. Getting into the details, on the right-hand side, Hochschild has built an open pit mine, what's labeled Posse, that little yellow zone. So we do not have a royalty on that production, just to be very clear, but Franco-Nevada has a 1% royalty on it. Royal Gold has a 2.75% royalty on it, but none of those two big royalty companies have the option on the exploration package, which we have. And we believe that over time, this Bastino discovery, about 3 kilometers to the northeast, will become a cash flowing royalty for us. And all of those little red dots are targets that Hochschild will be exploring over time. So the leverage there is for every 100,000 ounces of gold they can define, times 2%, times a $2,000 gold price, that's worth about $4 million US to us. That's our leverage to that royalty. I don't think it's being baked into our share price, but we'll figure out how we create value for all of our stakeholders with that royalty. And so just to sum it up, our near-term objective, again, 10,000 meter drilling program is to define what we have at Fazenda and also trying to increase the footprint at Boutia. Medium term, we'll start de-risking that on the permitting side. Long term, we're going to continue to explore to unlock the value of our property package. That's it. Thank you very much for your time.
Great, thank you very much. I'd now like to welcome Luc Lessard, President and CEO of Falco Resources. Falco is a Canadian mining company focused on the exploration and development of the Horn 5 project, a large gold project located in the Rouyn-Noranda mining district of Quebec. Please help me welcome Luc.
Alors, merci d'être présent. Je vais faire vraiment un récapitulatif vraiment à haut niveau. Je vais parler en français et ceux qui veulent avoir des précisions sur le contenu, à la fin de la présentation, je vais être disponible pour répondre à certaines de vos questions. Donc, Falco on 5. On va les passer rapidement. Je pourrais parler pendant 1 heure de temps sur les highlights ou sur les faits saillants, mais essentiellement, ce que je veux vous dire aujourd'hui, c'est le projet ON 5, c'est un projet d'importance au Québec, près de la zone urbaine de Rouyn-Noranda. En fait, on est dans le quartier nord de Rouyn-Noranda, dans le parc industriel. Ensuite, évidemment, ça donne beaucoup d'opportunités ou d'avantages. On a accès à d'innombrables services municipaux, les hôpitaux, les routes, le chemin de fer, mais aussi la main-d'œuvre. La main-d'œuvre de Rouyn-Noranda de qualité, beaucoup d'expérience, les fournisseurs de services, des équipementiers. La plupart d'entre eux, je les connais personnellement par leur nom parce que j'ai vécu, comme vous le savez, l'histoire au Cisco 1 avec Canadian Malartic. Donc, plusieurs d'entre eux ont collaboré à ce success story. Donc, on veut répéter une autre fois cette aventure avec les entrepreneurs locaux. En 2021, on a fait l'étude de faisabilité qu'on a mise à jour par rapport à celle de 2017 et on anticipe de faire une autre mise à jour au cours du deuxième moitié 2024 pour prendre les derniers éléments de market conditions sur commodity price, escalation. Donc, on va remettre à la fin de l'année une mise à jour, si on veut, de la section financière de l'étude de faisabilité pour vraiment refléter le contexte actuel des marchés. On a aussi la propriété, des grandes propriétés d'exploration autour du gisement ON 5, des propriétés, je dirais, de type VMS, or, cuivre, et puis à l'intérieur de 25 km autour du gisement ON 5. Donc, ça nous donne un potentiel de life of mine extension lors des premières années d'opération du gisement ON 5. Particulièrement récemment, au cours du début de l'année 2024, on a annoncé par voie de communiqué de presse des éléments importants dans nos jalons. Et un des éléments, c'était d'avoir une entente avec la société Glencore sur la licence d'opération. Licence d'opération, on parle de quoi aujourd'hui? C'est essentiellement qu'on est très près de la fonderie Horn. Glencore voulait s'assurer de la pérennité des opérations à long terme. Donc, il y a une série d'éléments techniques qui ont dû être validés, vérifiés. Vous comprenez que c'est la fonderie, c'est l'ancienne mine Horn, c'est le dépôt ON 5 qui est une extension. Donc, il a fallu vérifier d'énormes éléments avant de pouvoir compléter cette licence d'opération-là. Donc, c'est un élément pour nous qui était de grande importance. On l'a obtenu. Et suite à ça, il y a eu le deuxième élément sur lequel on voulait avoir des avancements importants. C'est le dossier de la recevabilité de l'étude d'impact. Et comme vous le savez, en mars dernier, on a reçu la lettre de M. Charette, ministre de l'Environnement, nous indiquant que l'étude d'impact, en fait, de Falco était reçue recevable et ça permettait à Falco de pouvoir poursuivre vers sa prochaine étape, qui est les audiences publiques. Donc, je poursuis. Donc, je parlais des propriétés d'exploration rapidement. Donc, on voit au centre le gisement OIII, et tout en bleu, c'est essentiellement le territoire associé à nos propriétés d'exploration. On a beaucoup d'éléments sur lesquels qui nous indiquent que près de la surface et même en profondeur, il y a des possibilités de découverte additionnelles. Donc, on va définitivement, dans le prochain futur, relancer certaines cibles sur lesquelles on voudrait faire de l'exploration plus soutenue. Pour les gens qui sont moins familiers avec la région de Rouyn-Noranda, on voit ici en contour bleu, je dirais, les limites sectorielles, territoriales, si on veut, de la propriété ou de la fonderie Horn, fonderie de cuivre. J'ai superposé en surface la zone de l'ancienne mine Horn en rouge et projeté toujours en surface en noir contour le dépôt, le gisement OIII. Donc, vous voyez, on est ce qu'on peut appeler dans un périmètre relativement restreint. Puis, tout en bas de la page, on voit le quartier Notre-Dame de Rouyn-Noranda. Tout au haut de la page, on voit le secteur en vert jaune, qui est essentiellement l'ancien site de la mine Couémont. Donc, il y avait une opportunité pour nous, pour avoir accès au dépôt OIII, d'établir notre base de travail sur ce secteur-là. Donc, l'ancienne mine Couémont va devenir, si on veut, notre porte d'entrée pour le gisement OIII à partir de galeries horizontales qu'on va faire ultérieurement. Donc, sur d'autres facettes, je vais vous montrer. Donc, on voit ici l'ancienne mine Horn sur la longitudinale, en brun foncé, un dépôt qui était essentiellement miné entre 1926 et 1976. Pour le cuivre, l'or était récupéré à partir du concentré de cuivre. On se rappellera qu'à ce moment-là, Noranda avait ses opérations minières, ses opérations de fonderie. Donc, c'est un projet complètement intégré. Suite à la fermeture, la fonderie Horn a poursuivi ses activités de fonderie avec des concentrés provenant de différentes zones sur la planète. Donc, pour nous, c'est important de développer le projet en cohabitation avec les anciennes activités minières du passé. Une des choses que vous réalisez, c'est que le puits Couémont va devenir un élément d'infrastructure qu'on va réutiliser pour les opérations d'OIII. Donc, le puits va être dénoyé au même titre que l'ancienne mine Horn. Puis, on va donner accès à la partie supérieure du dépôt et ensuite de ça, faire des extensions. Le gisement comme tel, c'est quoi? C'est 80 millions de tonnes de minerais, teneur moyenne de 2,25 grammes par tonne, équivalent, considérant les métaux de base. Si on regarde la flèche bleue au bas de la page, évidemment, on parle d'une extension possible du gisement en profondeur. Pour les ingénieurs miniers qui sont dans la salle, le dépôt a 2 km de haut, 1 km de long, 100 mètres d'épais. Donc, ça donne d'innombrables possibilités au niveau d'optimisation des opérations, donc des chantiers, des multiples blocs, efficacité opérationnelle, les meilleurs équipements disponibles, les hautes technologies, et j'en passe. Dans les chiffres, peut-être un chiffre à mentionner, c'est au niveau des opérations minières aurifères. Donc, pur gold, on parle de 220 000 onces par année de production. Or pur, si on regarde sur une base d'onces d'or équivalent, on est dans les 330 000 onces d'or équivalent par année. Donc, qui fait que c'est un projet d'importance. 15 ans d'opération établis par l'étude de faisabilité. 6,1 millions d'onces d'or équivalent dans le dépôt en réserve. Et si on regarde sur les ressources toutes confondues, on parle définitivement de 9,3 millions d'onces d'or équivalent dans le dépôt. Je rappelle qu'on est un producteur métaux de base, mais aussi métaux précieux. Dans les métaux de base, le cuivre est une entité importante pour le Québec. On en fait un élément de discussion avec le gouvernement. Ça pourrait devenir le producteur principal de cuivre au Québec au cours des prochaines années, en ligne avec les alignements pour l'électrification des transports et diminution des footprint carbone. Peut-être que je vais aller directement au niveau des éléments principaux au niveau de la mine et de l'usine. Bon, c'est un sulfure massif, dépôt de grande taille, qui va donner d'innombrables avantages au niveau des séquences de minage et de développement. On va miner de 650 mètres à partir de la surface, les premiers 650 mètres étant essentiellement l'ancienne mine Horn, jusqu'à 2000. On réutilise les infrastructures de la mine Quémont et la méthode de minage, c'est du transverse long hole ou minage par long trou transverse. On a l'avantage que la qualité du matériel encaissant est de très haute qualité, très solide, très robuste. On prévoit des dilutions de moins de 3 %. Il va y avoir du dénoyage à faire. C'est un projet de 2 ans de dénoyage. 11 millions de mètres cubes d'eau qui devront être pompés, traités, disposés dans l'environnement selon les critères de la directive 019. Au niveau de l'usine, essentiellement, quand on regarde la dimension de l'usine, c'est à peu près la même size que celui de Canadienne Malartic. Un circuit de broyage, 3 circuits de flottation et un circuit de regrinding, de rebroyage pour les concentrés de pyrite. Et finalement, le circuit final sera un circuit d'élimination des résidus. Traitement en pâte pour ce qui va être envoyé dans le secteur du gisement 11-5 et remblai hydraulique pour les anciennes ouvertures à remblayer dans le secteur Horn. Donc, essentiellement, 50 % de nos résidus vont être disposés dans les ouvrages anciens, historiques ou nouveaux avec 11-5. L'autre 50 %, on a l'intention d'utiliser un ancien site minier de l'Abitibi qui s'appelle le site Norbec, qui est un site minier dont le parc à résidus est toujours résistant. Donc, on a l'intention d'utiliser ce footprint-là pour en faire une disposition de nos résidus miniers, la partie 50 % additionnelle. Donc, mining, c'est sûr qu'on s'en va avec des nouvelles technologies, opération à partir de la surface, donc remote, batterie, les plus gros équipements, donner un exemple, les chargeuses navettes, scoop tramp, bucket size, c'est 25 tonnes, donc c'est dans des catégories d'équipements qui sont dans les plus gros au monde. Souvent, je fais le parallèle, Falco, c'est 11-5, c'est essentiellement un open pit, mais sous terre. Donc, vous voyez l'analogie, ça donne quand même une bonne référence. Si on y va au niveau des éléments de fond, au niveau de l'économique du projet, toujours basé sur l'étude de faisabilité de 2021. Essentiellement, on parle d'un NPV de l'ordre de 800 millions de dollars US. On parle d'un taux de rendement interne de l'ordre de 19 %, toujours à 1600 $ l'once, je le rappelle, et un all-in sustaining cost, donc coût de revient tout inclus de l'ordre inférieur à 600 $ l'once. Donc, définitivement, Falco On-5 va être dans les catégories des projets, les coûts de production les plus bas au monde. Si on pose la question de savoir si c'est un projet d'or, un projet de cuivre ou un projet de zinc, l'indice des payable metals l'indique très bien. Donc, essentiellement, 75 % de nos revenus vont provenir des métaux précieux, 25 % additionnel va provenir des métaux de base. Juste faire une petite analyse par rapport aux conditions du marché actuel sur le prix de l'or. Le projet, par rapport à 1600 $ l'once, toujours pour l'or, si on l'amenait à 2000, le taux de rendement passerait de 19 % à 26 % et le after-tax NPV passerait de 760 à près de 1,2 milliard de dollars. Donc, très sensible au prix des commodités. pour le dossier Falco. Rapidement, pour les dossiers de capitaux, 845 millions US, on parle de l'ordre de 1,1 milliard canadien, sur lequel on va vérifier dans les prochaines semaines, prochains mois, faire l'ajustement des dernières escalations des dernières années. Mais nonobstant, on pense qu'on serait dans les eaux de 1,2 milliard, plus ou moins, pour un projet révisé avec les conditions 2024. Puis les deux contributeurs les plus importants sont la mine et l'usine. Coût d'opération inférieur à 600. J'ai mis devant vous le modèle financier, mais essentiellement, les crédits de sous-produits font en sorte que Falco demeure un projet de faible coût. On a un crédit qui s'applique de l'ordre de 600 $ à l'once, qui nous amène à moins de 600 $ l'once, avec les sous-produits inclus. Donc, dans les secondes que j'ai encore devant moi, si je compare Falco à tous les gros opérateurs, les gros noms, vous voyez là, que Falco est dans le premier quartile. Le coût moyen présentement dans les marchés sont de l'ordre de 1 200 $ l'once. Falco, je le répète, 600 $ l'once. Donc, je termine avec cette page en disant que Falco, les 6 dernières années, ça a été passablement occupé pour faire de la paperasse. J'ai vu plusieurs présentations cette semaine. Rappelez-vous que le permitting, c'est un processus qui est long et laborieux et exigeant, nécessite énormément d'énergie et de discussion, mais il reste qu'il faut rester debout, il faut focusser sur les bons éléments. Mais en plus, nous, on avait les dossiers Glencore sur lesquels on a dû s'attaquer. Je le rappelle, il y a eu des due diligence qui ont été faites. On a signé des off-take agreements sur le cuivre et le zinc. On a finalement reçu la licence d'opération qui nous donne accès au territoire. Et avec le ministère de l'Environnement, très récemment, on a reçu l'approbation de la recevabilité ou la recevabilité de l'étude d'impact. Et ça, c'est suite à de nombreuses années de questions et de réponses et de clarifications, de COVID et d'éléments indirects qui sont survenus. Et ça nous a amené à obtenir je dirais pas cette autorisation, mais la recevabilité. Et Falco débute ses audiences publiques au cours des prochains mois. Merci à vous. Bon dîner.
Thank you very much. Please welcome Hubert Perrin-Bouchard, Chief Financial Officer of Radisson Mining, for a fireside chat with Matt Gordon of Crux Investor. Radisson Mining is a gold exploration company focused on its high-grade O'Brien project located in the Abitibi Greenstone Belt of Quebec. Welcome, Hubert and Matt.
Hello, everyone. Thank you for being here. How are you?
I'm very good. Yourself?
All good, all good. Had a good conference so far?
Yes, very good. Hopefully, it keeps improving, meeting new investors, building the foundation with the existing ones, updating desks, and the venue is perfect, organization is perfect, great time of the year before summer. So hopefully it builds itself as a go-to conference moving forward.
Let's hope so. Joanne's done a great job. Why don't we start by, if you could introduce yourself and the company in sort of 30 seconds or so, and then we'll pick up from there.
Yeah, quick intro. I'm Hubert Perrin-Bouchard, CFO of Radisson Mining Resources. I've been with the company for 9 years now. Started essentially in accounting and a bit of IR, corporate development, and eventually grew into the CFO role, which I am into since 2021 already.
Right. Okay. So maybe talk about what you've got today, because it's one of those stories which feels like it's taken a long time to get to where it is. A fair bit of money spent, but it feels kind of like a new beginning, a moment for change. So talk about what you've got today and maybe where you've come from.
Yeah, so if you look at our balance sheet, we invested close to 45 million on the O'Brien project. Bulk of it has been invested in the last 5 years. A lot of drilling. The project has the opportunity of hosting the richest mine by grade in Quebec, the former O'Brien mine that produced close to 600,000 ounces between 1926 and 1957. And the idea back in 2019, after reinterpreting the old O'Brien mine, was that we could replicate those prolific infrastructures every 300 meters or so moving to the east, which we were able to do on what we call high-grade trends. Since I joined the company, we moved the resource from 150,000 ounces to now more than 1 million. And we are on the cusp, I believe, of showing that there is a mine there that will eventually be one of the 700 projects that is eventually developed and becomes a mine.
Okay, now like I say, it kind of feels like a story which people haven't kind of caught on to yet, in the sense that you spent 45 million bucks on the balance sheet you're talking about. We're setting a market cap of what?
Market cap is around 60 million. We have 6.5 million in treasury. The bulk of that will be invested in drilling and ongoing studies for permitting as well. So I feel like we're not getting much of an appreciation in terms of valuation of the asset, given the quality ounces, the infrastructure is in place. You know, we're halfway between Rouyn-Noranda and Val-d'Or, near a provincial highway with power grid that is directly on site. So a clean source of energy, low-cost energy as well here in Quebec. So I think there's a lot of work to be done at O'Brien. There's a lot of potential to keep growing the asset, and there's some work to be done on the company valuation as well.
Absolutely, and I would encourage people to look at your PowerPoint presentation. It's all laid out there. Some great pictures which demonstrate, you know, where you are in terms of road, power, etc. It should be good. People, like I say, I'll keep coming back. They're not catching on yet. But you've got appointed a new CEO. Matt.
Matt Minson.
What's the brief for him?
Matt was appointed actually on Tuesday. He'll join the company officially.
That's why he's not here.
Yeah,
right. Okay.
Exactly. He'll join the company on July 1st officially. He's coming off the sale of the Valentine Gold project from Maritime to Calibre Mining recently for I think 350 million. He has built 3 mines over the course of his career. Background is in geology, so he sees the foundation, you know, at O'Brien to, I guess, keep growing the company valuation and look at synergies, because there's a lot of, you know, I would say, availability, and most assets are still trading at a very low valuation right now.
Totally, but so are you. So it's kind of a case of first things first. Let's get our house in order. You've got a super high grade. You've really got. I mean, that's, you know, that's a
10 grams per
pleasure
ton.
to have. That's a nice problem to have. But for him coming in and as a mine builder, he's got a lot of stuff to do between now and being able to get in production. I think first of which is show the scale of the opportunity in front of you. So what's the plan?
Well, last September we announced a 10,000 meter drill program, and the approach was to continue to grow the resources. We've recently announced the expansion of that drill program, so we're using a 70-30% approach, where 70% of the drilling is being done on low-hanging fruit targets to grow and improve the resource area from surface down to 600 meters. But we're also, the remaining balance is on step-out targets and exploration targets, and it's quite exciting, because for the first time in the company's history and the O'Brien project history, we'll be drilling the depth extent of the old O'Brien mine, and also stepping out below the resource area down to 1,300 meters. So in Abitibi, projects have a history of you know, getting better, higher grade at depth. So hopefully we see that at O'Brien as well.
So you're going to get after at depth. So it's currently like from surface down to, we're showing about 1,000 meters so far.
900 meters.
900 meters, right? Okay. And still open below that. Still open.
Still open.
Okay.
We have 5.2 kilometer on the Cadillac break. The resource area is open below 900 meters on 2 high-grade trends, and 500 meters on 2 others as well.
Okay, so let's assume you can continue finding high grade and the drill program goes quite well. In terms of, because I don't know the Abitibi so well, in terms of the kind of permitting process, I guess you're into that. Is that, how long does that process take?
That's a good question because it's an important part of project development. You know, we've been working on the environmental studies for that project since 2019.
Right.
Already we have the bulk of the permits required for underground exploration, which would include a bulk sampling program that needs to be integrated in a future mine plan. So these studies are ongoing, and we're upgrading those studies in order to eventually gain the construction permits as well for the mine.
Right, and what are the other kind of, not red flags, but long pole in the tent is a cliche I use a lot, where, like energy source, so is it cheap, is it reliable? I know it comes up to site, but how's that?
Yeah, well, we have, if you look at slide 14, I think in your deck, in our deck you've referenced, you can appreciate the infrastructures. We're just beside the paved highway, highway that connects the Abitibi to Montreal, actually, and you can see also that the power grid, electricity power grid is directly on site, so that's an excellent source of power for us directly.
Right, okay, and obviously a lot of big players around you, and it's obviously got the history going on there. So in terms of when you're going into the institutional investors, I mean, if I look at the board, look at this current share register, it's, you know, it's pretty good.
Yes, the company has around 320 million shares outstanding. Around 10% is held by management and insiders. Institutional ownership sits at around 26%. And the opportunity we have at Radisson, and I think that's part of the reason why our share price has outperformed in 2023, is that we have a very solid base here in Quebec. Private investors, a group of roughly 35 guys that know the industry, around Michael Gentile, our strategic advisor, Mario Bouchard, my father actually, and former CEO, and myself. These guys, they own a core position of roughly 30%, and they've been very supportive in the market and every round of financing. So with the 320 million shares out, we control roughly 65% of the float within 55 hands, so that's a strong attribute for the company.
It's a strong attribute, and it has liquidity.
Yes, it has right now.
You're happy with that?
Well, of course, you always need to work on that, but I'll be more happy when I have liquidity at much higher levels.
Right, okay. And when's this drill program actually finish?
The 35,000 meters will be completed by year end, so results should continue to flow until the first quarter of next year.
Okay, fantastic. So if you were trying to position this company into new institutional hands, what are you saying the upside is, the blue sky is? Because, like I say, for me, it's got to demonstrate that scale. It's not necessarily quality, but it's the scale. What else is there?
Well, we've reached, that million-ounce target here, and we're not talking about a million ounce at 1 gram. You're looking at 10 grams per ton. So the idea is to use that drill program to show the potential at depth. Hopefully hit something even better than what we have. I don't see why we would not hit at depth, because the vertical continuity of those shoots is very good and demonstrate a path to more than 2 million ounces here.
Right, which is obviously on the scale side of things, but getting into the economics and demonstrating that is important, because, as you say, it's a very different project from, say, 1 gram per ton project. The margins and returns should be significantly higher. When can you get to a point where you can say, we know what we're going to be able to produce?
Well, if you look at the average hit rate at O'Brien, 3 out of every 4 holes have hit grades above 5 grams per ton since we started drilling that in 2019. We were able to add 3.1 ounce per drill meter, and we're benefiting from very low exploration costs. We're drilling on an all-in basis right now at $170 per meter. So we are benefiting from the infrastructure, the location, and the relationships we have locally to be able to generate a lot of value from the drill bit. So if we add, say, another, that 35,000 meters program alone, The idea when we started was to keep adding to the mine life, so we could eventually, support the economical studies towards development. So we're on the cusp, I think, of showing that and getting to that
But
stage.
more likely next year.
More likely like in 2025, 2026,
Right, okay.
and new boss, so we'll discuss a lot of strategy.
Well, but that's the interesting bit. As a mine builder, I quite like that because he's going to have a view today of where things are going to be positioned, I suspect, very, very quickly. But I think the market needs to understand that too. So things like network, have you done any, or will you be doing some this year?
We are currently upgrading those studies as well on the metallurgical front, so there are questions to be answered on that front, designing the optimal flow sheet and all the environmental considerations as well. So we're working on that front as well. So advancing the project on all fronts.
Okay, fantastic. Well, look, I think it's a great new project. It feels like a new beginning for this company. I look forward to seeing what you do with it.
Thank you very much, Matt.
Thanks.
Thank you, everyone.
Thank you, everyone.
Good afternoon, everyone. For those of you who still don't know who I am right now, I'm Joanne Jobe, and I'm the founder and CEO of the event. I hope you've all been having a great conference experience. It's my great pleasure to introduce, for the very first time, our Newfoundland and Labrador Spotlight. This spotlight will be moderated by our very good friend and supporter, Angie Stockley, President of Blue Ice Gold and SSAF Exploration. Angie?
Thank you for that warm welcome, Joanne, and welcome everyone, and thank you for being here for our first panel for Newfoundland and Labrador, specifically around Newfoundland's global position and opportunity. And I thank my esteemed panel for being here with me today as well. I'm actually going to have them introduce themselves. And we have a very short time frame, and they have so many credentials, they could probably take 30 minutes each, but I'm going to make them have it short and sweet.
All right, I'll kick it off. My name's Darren Cook. I'm the CEO of Firefly Metals, and we've just recently acquired the Green Bay project in northern Newfoundland. Basically, it's a large copper project. Extremely large resource. It's 40 million tonnes at a grade of 2.1% copper, and we're looking to rapidly expand the resource and bring the mine back into production.
Hello, my name is Paul Carter. I'm Executive Director with the Department of Industry, Energy and Technology with the provincial government of Newfoundland and Labrador. Currently working on various mineral-related files within the department, but I guess more particularly, I've been very active in terms of developing a provincial critical minerals plan for the province, and as well as implementation. Thank you.
Okay. Hello, my name is Garrett MacDonald. I'm the CEO of Maritime Resources. We've got a high-grade gold project in Newfoundland and Labrador. We've been through a feasibility study. We own our own processing facility, and we've recently gone through the entire permitting process in the province. And Firefly Metals is actually an equity owner of Maritime as well, so there's a lot of things that we're working on that are very exciting. We're happy to be in the province and look forward to more to come.
Great, I'm Jeff Spinoga. Been in mining for about 25 years, running a gold exploration company in Newfoundland, beautiful Newfoundland. And our property is just north of Newfound Gold. We had our first gold discovery last year, which was fantastic. We got about $6 million in cash. Eric Sprott owns about 16% of us, and Newfound Gold himself actually owns 8% of us. So.
Thank you, everyone. I wanted to start with an overview and a perspective from everyone on what makes Newfoundland and Labrador such a great jurisdiction to be mining and exploring in. Darren?
Yeah, well, we're only a fairly new entrant to the province, and you know, we did a lot of work on jurisdictional risk during the due diligence before we decided to enter and explore there. And look, the key thing that really stands out to us is how great it is to work with the local communities. They're extremely supportive of mining and progress and development. And the other thing is, it's been amazing the support that we've had from the provincial government with Paul and the rest of his team. You know, it is a big risk, and it's a question that I get quite a bit in Australia, you know, because there's a perception that Canada can be very difficult to operate in. But what people really need to understand is that Canada, like dealing with the different provinces, is like dealing with different countries. And, you know, each province is very different, and I can be nothing but complimentary of the support and, you know, everything that's been provided to us from the province.
Thank you. Paul, I'm going to come to you last to do a bit of the government perspective.
Sure,
so I'm going
absolutely.
to move ahead to Garrett, if that's okay.
Yeah, no, I've got nothing but great things to say. We've, you know, as a small company, our market cap's about 35 million, so we're on a little bit of a different track than a lot of junior companies. We're in the development phase now, so we've got a high-grade asset that we're ready to develop. We have a processing facility, been through permitting, but we also have that exploration upside that's coming in from behind, and we'll fill in the mine life, and we see a lot of potential to grow what we have. But as somebody who came in for about 5 years, I've been working in the province, and it's come a long way, and we've had great support from the local communities. There's everything that we need to develop a project is there. So we have skilled labor, we have infrastructure, access to power. There's a regulatory framework that works for us, and we're excited to get going. We're getting very close. Next thing we have to do is raise money and build the project. Yeah.
Perfect. Jeff?
Yeah, so short story, a couple years ago I was doing more of a relationship management role, and I told my wife I'm going back into mining. And she goes, because I worked in Mexico, South America, Africa, and I said, I'm going back to mining. She's like, oh, let me guess, Africa again. And I said, no, Newfoundland. She was, oh my God, thank God. And, but no, honestly, you can see the rankings being top 10 in the world for jurisdictions, but I got, the government's been fantastic. They're behind, new mines, new development, exploration, the people, the power, the infrastructure. But honestly, you hear stories, like even I heard a story last night where someone was cycling across the province. And that was the plan, to go for 10 days of cycling. And it turned out to be raining the first 2 days. So this couple took them in, fed them, had them stay overnight in the son's bed, and for 2 days they stayed an extra night. So it's like the people are just fantastic, and the stories that you hear about the kindness is just fantastic. So anyway, it's a great jurisdiction.
Yeah, very true. You are all welcome to come to my house if you visit Newfoundland and Labrador, cycle or otherwise. Paul, if you could give us some perspective on the Newfoundland government's perspective, sorry.
Sure. I guess as government, we're trying to position the province, of course, as a globally recognized jurisdiction for mineral development and production. We're striving, I guess, to, move forward, being very inclusive, environmentally, socially responsible, innovative, and a jurisdiction that looks to maximize opportunities through effective collaboration. And that collaboration can be in many different forms, be it directly with industry, within the province itself, internationally, nationally, and looking to collaborate and look to be able to build partnerships to advance the industry, through all stages of critical mineral development. I think as a government, we kind of pride ourselves on being very accessible to industry and responsive to their needs.
Yeah, very true. Actually, Garrett, I wonder if you could pick up on that accessibility theme. You shared a little story with me yesterday about just how accessible the Newfoundland and Labrador government can be.
Yeah, it's been great for us. We were in the process of buying some infrastructure in the province, and we had I don't know if there's any lawyers in the room. I hope not, but employers fighting with each other and getting together and just taking some extra time. But what we needed was a little bit of help to kind of break a logjam and get things going. And it was actually the province that they made it happen quite quickly. So a couple of phone calls, and we knew who to talk to. And that's the good thing about Newfoundland and Labrador is you have access to the people that you need and when you need it. So they're very helpful. We were able to get this logjam settled on a Sunday afternoon, and come Monday morning 9 a.m. we were good to go. So that's a good example of the support and the commitment I think that they provide, and we were very happy with that.
Yeah, pretty amazing. Paul, would you say that is the standard for the level of accessibility?
Well, I guess, there's always matters that need to get resolved, and, but certainly up in the foremost and forefront of all of this is that, working through our regulatory process, we need to be very efficient about it and recognize, of course, we don't compromise one for the other. But when we know there's a need and industry, needs something, we'll do our best to try and accommodate and, make that happen. And I think as a government and as a jurisdiction, we clearly recognize, the importance of certain milestones, permitting, and ability to generate cash and investment into the various projects. So we're very attentive to that.
Wonderful. Jeff, I wanted to put a question about collaboration and support in all levels, from the local community through to the juniors, the prospectors, the different associations that are in mining, and the government as well. If you could take it from the perspective of what's a really great example of collaboration that you've had.
Yeah, it's a great question because I've worked on many projects, I'm sure like many of my colleagues here, and again in more challenging jurisdictions. And the lesson learned for me is always it takes a village, town, city, province, country to really get behind a project to move it forward. And in what we're seeing in the province is that fabric is there all the way from the local community. We try and do as much engagement as possible. We have all local staff. Like we're super happy. Either from Gander, from Gambo, or from St. John's. They want to stay working in the province, right? So we're happy that we've had no turnover really. So it's been fantastic. But I guess maybe a short story about giving back. Two of our geologists, Nate and Casey Stone, did a cookie example to young kids at Gander Elementary School about what's mining all about in a sort of baking cookies example. And of course, at the end during reclamation, you get to eat the cookies. So it's quite or cleanup. Maybe it's cleanup. Maybe eating is the production. But it's just a great example about how we're giving back because we're feeling how to describe it, feeling the appreciation, the love, from all different levels. And of course, we are values-based exploration company, so we really care about our values and how we reflect those values. We don't necessarily have them on our website, but we embody them and we like to reflect it that way. So anyway, hopefully that's an adequate story for you.
Yeah, absolutely. And I know Jeff's team really, really well. His project is actually in my backyard, literally. And I grew up with a lot of people on the team, and I know firsthand how social value is a really important foundation to what you do, and you've got a very committed team there that's very proud to work with Exploit. So well done. On the collaboration front, I know even the mining companies, the exploration companies collaborate together, and we have two good examples here with Firefly and Maritime. If either of you could take and explain that a little bit.
Yeah, well look, we've all got common goals, and we really want to see Newfoundland and where Garrett and I are in the Bayvert Peninsula in that area, we want to see it thrive. And there's advantages in working together. There's been a lot of isolated pockets of great work done, lots of isolated pockets of great exploration. There's been isolated pockets of infrastructure here and there. And there's a real opportunity there to assist each other and leverage off working together for the common benefit. And Garrett's doing a great job with the Hammerdown project and getting that off the ground. He's got the Pine Cove project, and a recent example of that is where we've managed to secure access to Garrett's port, which enhances the economics of our project because they were previously trucking at 140 kilometres this is only 6 kilometres from our mine. So that is a great example of us being able to work together.
Yeah, no, it's, I think that's the key to success. First of all, we're on an island, we're kind of remote, and I think to extract a lot of value that's up there in the Bay River District that we see, the companies can work together to make that happen, whether it's through shared infrastructure or jointly exploring for different minerals. All that's on the table because it adds value to shareholders at the end of the day and the communities, which is great. So we're wide open for those kind of ideas. Another example that we're working on as well is there's a private aggregate company on site who's actually mining through waste rock from the old mine that was there once before. It's crushed, it's washed, it's actually loaded onto ships and it's sent down to Florida for construction aggregate. So it's good for us because they're reducing our environmental liability at the same time. There's jobs available for people, and it opens the doors for some pretty cool ideas with using the port to export copper concentrate or even bringing materials in potentially for some, toll milling in the future. So it's great. There's great infrastructure, and we're just trying to make the best use of it for the benefit of everyone.
I was just at a mining event in Bayvert last week, and I saw the support, like literally every single person in the communities that you're a part of are behind what you're doing, which is really amazing to see. Whatever anybody can do, however they can be engaged, it's really pretty powerful.
Absolutely.
But the next thing I wanted to talk about was the consolidation opportunity in the province of Newfoundland and Labrador, not just from the perspective of consolidating properties, but also consolidation of exploration efforts. Darren, would you like to take that one?
Yeah, one of the things that we noticed when we looked at Newfoundland was that there was a lot of smaller operators around there, and particularly Angie and her friends who are prospectors, and they've done a great job staking ground and advancing projects. But some of the things we're looking at is trying to consolidate some of the land packages to actually do a large-scale, systematic, modern exploration campaign. And one of the things that really stands out about the province is that there's been such a lack of investment in exploration on a large scale over the last 20 or 30 years. It is primed for making discoveries. And my view is the best way to do that is to start consolidating some of these ground, applying some of the broad geophysical techniques that we have, and really hammering it hard. And the only way to do that from a regional context is consolidation. And whether that's through M&A activity, but I think what we're already seeing in the province is actually cooperating with our neighbours. It's not necessarily a competition if we can get to the greater good. So things are moving forward in that direction.
Yeah, no, I think there's a lot of opportunities for these hub and spoke models to develop. We have up in the Bay River District alone, or down by Gander, there's a ton of potential. And if we can make use of existing infrastructure, because it takes time and it takes obviously a lot of capital to build these projects. And we're in a cyclical kind of world that we're in with minerals, but here we are at $4.50 copper and $2,300 gold. It's the perfect time to get creative and see what we can do together. Yeah.
Jeff, in the Appleton Fault area, the central, I'll call it the overall central Newfoundland gold trend, there's been talk about potential consolidation. I wondered what your thoughts were there about the potential and or necessity for that consolidation.
No comment. Yeah, what Angie's talking about is there's a recent transaction there where along this Appleton Fault, it's like a 100-kilometer fault line. There's multiple faults in the province, but this one's getting the most love on the eastern side. And there's been 3 players there: Newfound Gold, a billion-dollar company, 20 gold discoveries, fantastic company to emulate. And then there's Labrador Gold and ourselves. Labrador Gold did a transaction where they sold their property for $20 million of Newfound shares, and that vote's coming up soon. But I guess to your point, Angie, about understanding your vision and purpose for the company. And so they've made decisions to focus on their Labrador nickel and maybe another project that sort of comes up. And we're continuing to focus on the Appleton. We sort of see I call it Newfound Gold's in blue and we're in yellow, so we see a sea of blue and yellow on the Appleton Fault. And so we like, there's two strong, well, they're $1 billion company, we're a 13 million market cap company. So we're hopeful to become the number 2 in the region in the sense of the next Newfound Gold. So we're working hard to do that. We think we have all the elements, all the fabric to do it. Whether there's more consolidation along the way, we're always looking for opportunities. We got lots of properties. Maybe there's option agreements that people could option into our property. The key thing is that when you see properties being held on to and not work being done on them, that's not really, in my view, in my opinion, a service to the province. You know, because the goal is, it's such a great environment. The early days of the Abitibi, if you want to call it, if you know, you fast forward, 50 years from now, this could be a huge, expansive area of mining and extraction for critical minerals and for gold and nickel and otherwise. So consolidation, I think, is going to happen. But it's going to take a little bit of time, and I think also there's great ways to figure out how to get access to a property to do work on it, if that makes sense. So I think there's a lot of conversations to happen.
Absolutely, I agree with that. Paul, I'm going to switch over to critical minerals now, and lots of questions for you. You recently released the critical minerals plan, which I have a copy of here, and I wondered, what are the key takeaways from that plan?
Well, I guess, and very similar to my original comments, about being recognized as a globally competitive mineral producing region, a region that, is mine friendly in terms of its development. Certainly, as a jurisdiction, we have a very strong record of mine development and bringing it to its, actual operations phase. There's a couple of, real interesting points within our critical minerals plan in terms of the way that we've approached building our critical mineral list. And again, it kind of goes back to the importance of partnerships and collaboration. I guess for us, we took a very serious, hard look around the world in terms of, like-minded countries as ourselves or jurisdictions, look at their critical mineral lists and kind of look at where there's opportunities because of the vast potential in Newfoundland, Labrador for minerals, where we might be able to participate in supply chains around the world and forming those international partnerships. But also as well, I guess at the same time, we're looking at climate change and adaptation, we're looking at the energy transition, and there are clearly opportunities where we see very significant strategic opportunities for the province to further its economic security, if you will, and develop, new supply chains or expand upon existing ones. So it's about collaboration, it's about partnership, it's about openness, transparency, and recognizing the importance to get this job done. And as a jurisdiction, we're very welcoming of all of the mineral investment that we do see. And certainly want to see that continue. The one thing I will mention very quickly, of course, is the, and perhaps a little bit different than you see on many critical mineral lists around the world, is as a jurisdiction, we were the first, as far as I can read or see, to actually designate high-grade, low impurity iron ore as a critical mineral in our plan. And, certainly we see a great future for that particular resource which the province has and its ability to decarbonize steel production, and it's something we're very, very impressed about. And if you look at it, it's very forward thinking, and I think it demonstrates our leadership in terms of a jurisdiction in these areas. And one thing I would like to say is, while we talk about our critical mineral plan and its importance, we're recognizing the wave that's currently out there in the global marketplace for minerals for energy transition, with various supports and incentives. And as a province, we would be remiss not to be kind of dialing our gauges towards looking at participating in those opportunities. But I want to be very clear, all minerals in Newfoundland and Labrador are important, and as evidenced by, some of my colleagues here today in the gold space, as a prime example. It's very important. We're looking at in excess of $200 million roughly in terms over the last number of years in exploration, and a large part of that has been gold.
Thank you. Darren, how does Newfoundland fit in Firefly's overall strategy to be part of that critical minerals supply chain?
Yeah, look, it's a critical part of our platform moving forward, and one of the key things in order to meet the targets that are needed for critical minerals is investment. And it doesn't matter where the money comes from, it needs to go into the ground to make it happen. You know, one of the stats that really frightens me is that we're going to need more copper in the world between now and 2050 than what's been previously mined in the entire 3,000 years of human prehistory. So, you know, where is all that copper going to come from? And, you know, a province like Newfoundland, which, you know, we're an advanced copper play, but there are so many more exploration opportunities there. And I think investment into the exploration will start to fill some of that void. But, you know, for us personally, you know, as a company, we're just motivated to get the copper out of the ground as soon as possible. You know, get the supply chain secured for like-minded countries, and Canada and the US and Australia partner on a lot of mineral projects, and I think it's really important for us to really keep it going and keep the momentum happening, and encourage other people to invest in the province as well, because the more global investment that happens in the country, in the province, it's better for everyone, because you know the province, from what I've seen, is blessed. You've got hydro energy, you've got wind energy, you've got all of these abundance of minerals, and don't underestimate how blessed the province is compared to other places in the world.
Thank you. There's actually, this is a little sidebar, but there's something that I wanted to interject as a woman that's a real benefit of working in mining in Newfoundland and Labrador, and that is it is very, very friendly to women. I came out of a high-tech 25 years as an executive there, and kind of launched myself into the family business in Newfoundland. I was immediately embraced. My male peers helped to elevate me, find me opportunity. They're always supporting me. It's really been fantastic. It's a very, very supportive environment. That literally day one, I was invited to be part of the Newfoundland and Labrador Prospectors Association as the director of inclusion and diversity. So that's just one example there, but I can only aspire to give my peers as much support that they give me as a woman.
Well, based on Angie's all initiatives that she's doing, including this panel, is that I started calling her the ambassador to the province. Unofficial. But she's certainly a mover and shaker behind the scenes, so thanks, Angie.
Absolutely. I have one last question for everyone, and I just wanted to give you an opportunity to interject a point of your preference. It could be something related to reinforcing about your company, you know, why people should buy, or it could be a last remark about Newfoundland and Labrador as a jurisdiction. Your preference. Well, I'll start with Jeff.
Oh, okay, great. We've only got 2 minutes, so check out Exploits Discovery if you like. We're well cashed up. Great shareholders, great jurisdiction, of course, on the Appleton Fault. But I guess I wanted to give a shout out to the government, because, again, welcoming investment in from Firefly and Calibre and others, that B2 coming into the province. I think people are companies starting to realize the benefit of being in that jurisdiction. And Gary's doing a great job on development. So I guess really, visually, and what I see is we go from conference to conference sometimes, creating awareness. The government's doing a great job, like Paul being here, of course, with Andrew Parsons. We see them going booth to booth, working hard, creating awareness. And I think they're just doing a great job. So maybe just a small shout out to the government for doing that, for creating the environment for us to be successful.
Yeah.
I agree 100%. I'm about to present after this thing, so I'll keep it short. I'll tell you all the good things about Maritime after that. But yeah, I will echo Jeff's comments about the support and the great things happening in the province. We just went through an entire permitting process, so we're a little, you know, we're fresh off of that, and we had a great experience, and we're here now getting ready for development, and we can't wait. It's really fun. Yep.
Maybe to have Darren, and then we'll have Paul close.
Yeah, look, I'm not going to repeat everything the other guys said, but I agree absolutely wholeheartedly. And yeah, just like to reiterate, you know, our appreciation for the government support. And you know, obviously we're looking to create a lot of jobs on the Bay Verte Peninsula. Like when we start constructing a new mill, for example, we're going to need hundreds of people coming into the town, spending their money, you know, getting the guys back from other provinces that are working away and they all want to come home. You know, we're really keen to make sure that it stays local, and really look forward to working with the government on the permitting, and also making sure that we've got enough infrastructure in the Bay Verte Peninsula to actually attract those people to come there to live. So we're really looking forward to the future.
Thank you. Paul?
Okay, thank you. You know, I guess in closing, we're getting close on time here. You know, I guess certainly, you know, I think there's a couple of points I'd like to make. You know, well, number one, of course, is our vast geological diversity. It's our openness, our transparency. You know, we're largely underexplored, and we have a track record of world-class mineral discoveries in this province. I mean, certainly, you know, generational mining experience and know-how, and a proven track record to development. And couple that with the ability for new energy, renewable energy, they seem to be all the right ingredients to make things happen. You know, and I guess I'd like to say thank you. You know, I think thank you is very important for those who are involved in our industry, our prospectors, our junior explorers, our developers, and of course the investors that are behind them. You know, certainly their confidence and, you know, demonstrated confidence in choosing Newfoundland and Labrador as a jurisdiction to conduct mineral exploration and development, you know, is highly welcome, and it's, you know, certainly we're very appreciative of, as a government, of those who help make Newfoundland and Labrador a good place to do this business. So,
thank you.
And certainly, I also need to say thank you to the conference organizers. You know, being invited here today as a differing jurisdiction, if you will, is very much appreciated, and we're very happy to have been able to participate. And I will leave with one final comment, and you know, if there's interest in the room of anyone to really get a better understanding of what's happening in Newfoundland and Labrador in the mineral industry, I would certainly welcome anyone to visit and join in our annual Mineral Resources Review and Canadian Institute of Mining mining show that takes place the first week of November each year, and it's very well attended, and you'll get a good overview of what's happening and where the opportunities might lie.
Thank you. I just wanted to say one last thing. If anybody is interested in a road trip, an investor road trip around Newfoundland and Labrador to discover the potential there, I would be very, very happy to organize that, and I know this whole team there would support that as well. So reach out to me, and I'd be super, as I said, very pleased to do that and make it happen. And we'd add in some Newfoundland flavor and screech-ins, and we'd have a time, as Newfoundlanders say. And thank you, everyone, for your attending this session. Thank you to my distinguished panelists, and especially thank you to Joanne and team and the supporters and sponsors of this fantastic event.
Thank you, Angie. That was a great panel session, and I can hardly wait to come to Newfoundland in the fall, where I'm going to get some of that great hospitality. And now I would like to introduce Garrett McDonald, President and CEO of Maritime Resources. Garrett, the stage is yours. Right behind me? Okay, great.
Thank you. All right. I have two microphones on, but we'll try it. Thanks, everybody. This is the same presentation I've given 39 times in the last 2.5 days, so hopefully I can remember everything here. So thanks very much. My name is Garrett McDonald, Maritime Resources, Newfoundland and Labrador, as you just saw, of course, and we are a gold developer and explorer, about a 35 million market cap company. As I mentioned in the presentation here on the panel, we're now fully permitted to develop one of Canada's highest grade gold mines with a processing plant that we already own, So I'm happy to tell you all about that here. So please read that at your leisure. So a quick summary of the company. We started this about 5 years ago as a new team. We came in with some investors from the Dundee Corporation and Sprott in Toronto. We looked at this Hammerdown Gold project. It was a former high-grade mine that was operated back in the early 2000s by a Quebec company called Richmont. So Richmont Mines was here back in the early days of $300 to $400 gold price at the time. And they made money because it was a very high-grade asset, averaged about 15 grams per ton. It was closed in 2004. So we came in, had a look at it, and said, look, this could be a really good open pit project. So we've scoped it out as a high-grade open pit. We have about 110 narrow high-grade veins, vertical, kind of stacked in close to each other. And we have infrastructure in Newfoundland and Labrador close by, namely processing facilities with tailings capacity. So we started to put everything together. We actually own 2 process plants now, which is a big advantage for a small company. And here we are arriving at a production decision very shortly, subject to financing, at an all-time high gold price. So the timing is great, and we're looking at all options here. We have an exploration program as well that looks very attractive, where we think we can add to the mine life and create extra value. So the Lassonde curve, the famous curve that everybody looks at, as you go through the cycle, you go through different stages. We are, oh, that's not a laser pointer, I'm sorry. Okay. We're on both arms of this famous curve. Like we've been through with our main Hammerdown Gold project, the kind of discovery phase. It's been through the PEA level of work. It's gone through project permitting. We've gone through that kind of right dip, and we're on our way up now looking at developing the project. On the other side of this curve, we also have the discovery potential. We own a very large land package of around 450 or so square kilometers where we see opportunities for additional Hammerdown lookalike targets and some VMS potential as well. So exciting time to be coming up both sides of that curve. There's the province or the island. We're in the northern part up here. We've got our next door neighbors, Firefly Metals, who acquired the Rambler Mines assets. We're just a little bit south of that with the main project I'll show you, but it's a busy, busy area. Jeff and the Newfound guys are down at the exploits area down by Gander. Calibre Mining is building a new mine there called Valentine. That'll be a 200,000 ounce a year mine right in central Newfoundland. And even on the south coast, there's some very good projects with Big Ridge and Cape Ray from Matador. So there's a lot going on. And as we just heard from the panel discussion, it's largely due to 2 things. One, the exploration potential. The mineral potential is fantastic here. And then again, it's the jurisdiction. If you find something here, you can actually make something happen. So we didn't mention it on the panel, but I thought it was very important that the government came out a few years ago with a target, an actual target of wanting 5 new mines by the year 2030. I never heard that before, and I've worked and consulted in a lot of different countries around the world, and that was really refreshing. And I think that's a big advantage here with the province, that it's a focus. Of course, you have to do your homework and you have to do things right. But if you do find something, of course, then you've got good support. In the Bayvert district, this is an old mining camp, and this would be very similar to what you might find up in Val-d'Or or in Timmins. You've got mines, mills. There's actually 3 process plants in this region. There's 2 gold plants that we own. There's a copper concentrator as well in the area. Long history of mining, well over 100 years here of copper and gold. So our projects are shown in the blue outlines. Things have changed in the last year here. There's been a couple new companies have come in, a little bit of consolidation. And like we said on the panel, companies like ourselves and Firefly working together to actually extract some new value and do things a little differently, which I think is great, because there's a lot of other cool ideas that we can work on here with other companies and everybody through this district. Best thing about it here, though, is, like I said, it's like a Timmins or a Val-d'Or. You've got suppliers, contractors, you've got mills and roads, you've got access to power at a reasonable cost, you've got everything you need in skilled labor. People are here. They often, you see them on the plane a lot. They'll fly to Fort McMurray or they'll go to Voisey's Bay and do the rotation. But given the chance, a lot of these people want to stay home and be home every night. So we've got everything here that we need. It's been fantastic to work here. Our main asset is the Hammerdown project. Like I said, it's been through feasibility. We're now getting ready to look at development. It's a very high-grade asset, so a 4.5 gram open pit mine. You don't see those too often, and you certainly don't see them matched up with an existing process plant that we don't have to build, it's already there. And then you don't see them often fully permitted from one end to the other. So this is a great little project for us. 50,000 ounces a year to start. That's a good starter mine for us. It'll generate a lot of cash flow, which we intend to use to grow the company into something bigger, focusing strictly though on Newfoundland and Labrador. The infrastructure is fantastic up here. The top left image is the Point Bruce project and the Pine Cove mill that we acquired from Signal Gold last fall. It comes complete with a 1,300 ton a day process plant, big in-pit tailings facility that's good for many years, and a deep water port there. As I mentioned on the panel, there's another company that's actually mining waste rock from the old mine, shipping it as aggregate down to Florida, helping us reduce the environmental liability along the way. So a great example of companies working together. Right now, after the feasibility and after permitting, of course, we're at that little point where we're looking for project financing, so that's number one on our list right now. We've gone through and looked at the plant. We're completing some inspections of the mill. We had a press release out this morning that's actually talked about the ability, we think, to process some of the stockpiles that we found around. So we have several thousand ounces near the mill that will be great to actually help us recommission the plant ahead of our main development coming in. So that's a great opportunity. Of course, when you do something like this, you want to make sure it's done safely. So we're going through those pre-development steps just to check everything out before we jump into a project financing and start construction. The other question we get asked a lot, though, is, of course, what's next? Where can you grow? Where can you increase mine reserves to create a bigger story or a longer mine life? We've got those opportunities in spades. There's quite a few of them. I'm an engineer, I'm not a geologist, so don't ask me any hard geology questions, but I can tell you what I've noticed here is that we find these quartz veins, these high-grade quartz veins and VMS deposits where big faults have intersected. So that's often the case no matter where you are. We have several of these on the property, and we've got new targets that we can't wait to drill, where we see mineralization that looks identical to our main Hammerdown asset. We haven't had any drilling here yet. We see high-grade quartz veins on the surface. We've sampled them, trenched them. We're getting ready for a drill program this summer. Just on the top left of the image there is an area that's brand new. This is about halfway to the mill compared to our main asset, so only about a half hour away from the plant. It could be a whole nother series of open pits that look identical to our main asset at the Hammerdown project. So pretty exciting stuff. We do have some VMS potential in here as well. This is actually a close-up at the mine level. The Hammerdown deposit is there, about 275,000 ounces in reserves at 4.5 grams. Okay, great, it's a good start, but that's not the whole story. We think there's at least 3 more open pit targets just within the radius of the mine footprint. We need to do some more work on these. These are early stage targets, but we think there's good potential. And even now we're seeing some potential with some VMS coming in. And this is something we never looked at before. This is like a zinc and copper, gold-rich silver, like there's a lot of minerals in here. That's that green target I show in the top right. And we know it's there. We've had some good results in there, but we've never started to consider any development until recently, of course, because now we have a process plant with a flotation circuit, with filter and a port as well. So it's very possible there could be a concentrate option here. All this is showing, I think, is that there's potential in the region, there's potential at the mine level, and we even have potential at the mill. So we call it the near mine potential. I'll skip this one for a second because you can't see it, but here is the near mill potential. So when I mentioned the hub and spoke idea here on the panel, I think this is very true in this case. Using the mill, and we have 2 of them, don't forget, but we'll talk about this one first, and this is one that was running about 14 months ago. It's been on care and maintenance for that time. It could start up again, I think, quite easily. And being fed with first from stockpiles around the plant to get it back up and running. Then there's potential, of course, there's our main focus to develop the Hammerdown project, bring all those deposits in. But there's also this, which is really exciting, and there's some very good potential near the mill, within about an 8-kilometer radius from the plant. This property, we bought it mainly for the process plant, of course, that's our main interest, but throughout this land package, there are several very interesting gold projects that are very close to development, including one's called Stoggertite. It's got a resource of about 70,000 ounces, open pittable, around 3 grams per ton. Needs a little more work to bring it up to a feasibility level so we could consider developing that one. That's only about 4 kilometers away from the mill. That's about 2 or 3 years of mine life. We've got some other targets even further north. Way back in the 80s, Noranda was at a project called Deer Cove. They developed a 500-meter underground adit into this quartz vein system. 6.9 grams over 25 meters at surface. Beautiful little target. It hasn't really been looked at in a long time, and that's the furthest one away, and it's only 8 kilometers from the plant. So there's a number of these little targets. They don't have to be big, and that's the good thing about owning your plant here. They don't have to cover a lot of capital. There's an interesting relationship as well with our local partner there, the Shoreline Group. They also do contract mining, so as we develop open pit mines in this region, close to the mill, the waste rock that we can generate is actually a useful product for them. So talk about sustainability, that we might be able to actually get rid of our waste rock, which is a useful product for them too. So this is a good example of companies could work together, and a lot of potential up here near the mill. That's the site of the Deer Cove project. We got a couple minutes left. These are some of the drill results. I really like this one. We want to go and check this out. So this summer's program, we're going to have an exploration program that checks out the quartz veins here. Where these veins kind of meet, almost like a T-bone, where they meet is where they start to blow up and get really wide. So this is an exciting project. And back in the 80s when Noranda was here, of course, gold prices were much, much lower than they are now. We have a project in Quebec. It's not just about Newfoundland and Labrador here. We have a little project in Rouyn-Noranda. We acquired this through a mill deal that we did with Rambler Metals and Mines. They had this asset, and it came to us. And it's something that's, I think, is quite interesting. It's just, to be honest, not something that we're focused on right now. So it's a strategic asset for Maritime. We'd like to sell it, or we'd like to find a partner for it. We're focused on developing our main asset in the province of Newfoundland and Labrador, which we're excited about. This one here, though, I think could be good for somebody who is familiar with the Abitibi and maybe has experience with gold and even some nickel and copper PGM material that's here too. So great little project. Anybody who's interested, let me know. And finally, last thing that we've done a lot of, we touched on it briefly in the panel, investing in the local youth. And we go to a lot of conferences. I'm really happy to see some of the younger people here and the students. I've had good discussions with a lot of them. We're trying to do this in Newfoundland and Labrador as well, where, of course, where we are is not, certainly not Quebec City. These are small towns, population 300,000-400,000. These are lots of small communities where when the kids grow up and they move away and the parents are, eventually retire and they eventually pass on, and then there's nothing left in the town. We're trying to get the kids interested in mining. So we started up something called Young Minds in Mining. It was an event we created last year, and we went out to the Bayvert District, and we brought in, I think it was about 200 students from 8 high schools within the region. And it was like a small conference that was just solely dedicated to them. So we had mining companies, contractors, the province was there, and we were showing everybody what mining was about. So the whole idea here is to get the young kids coming into the business, and we need them. I don't want to work for the next 50 years either, so we need those kids to come in and take our jobs and grow the mining business, which is the business we all love. So that's about it for Maritime. 3, 2, 1, 0. Okay, perfect. Thank you very much.
Thank you, Garrett. That was great. And now I'd like to introduce my very good friend, Jeff Swinoga, President and CEO of Exploits Discovery. Jeff?
great. Thanks for everyone to attend. Really good audience. And thanks again, Joanne, for the kind remarks. Yeah, Joanne is a good friend. So super happy to have friends like Joanne, the founder of this whole conference. So we're going to talk about exploits discovery. We're in the great province of Newfoundland, Canada. There's a gold rush that happened here. Well, let me go through it briefly. This is a cautionary note for anyone who wants to read that. But yeah, province of Newfoundland, fantastic. Central Newfoundland, there was a gold rush about 4.5 years ago, started off by a company called Newfound Gold. They're in blue here. They have all these great claims in blue. And they had a fantastic gold intercept. They've been drilling for 4.5 years, 20 gold discoveries, and we've got all the property in yellow. So we're very well positioned. We had a great staking situation about a year and a half ago to pick up our Bullseye property, the Gazebo property, which I'll go through in more detail. But more importantly, what's an overview? Great land, great supporting shareholders with Eric Sprott at 16%, Newfound Gold at 8%. We've got over $6 million in cash. It's always important to stay well funded. We just announced a new drilling program this year, and we had our first gold discovery last year. So how did Newfound become a billion-dollar company? Well, through great drill results. And so drill hole after drill hole, their market cap increased and became about $900 million right now. So we're sort of 4 years behind them, but we've learned a lot from their drilling. And we're a $13 million market cap with about $6 million in cash. So we see a pathway, hopefully, to a billion-dollar success again in Newfoundland. A bit of our capital structure. As I mentioned, we've got adequate cash, market cap about $13 million. Good share structure, no warrants outstanding right now, 156 million shares, 8 million of options, and our shares are relatively liquid. You can see we've traded almost 24 million shares in the last couple months, so very liquid stock, very good supporting shareholders in the US and Canada. And we've been able to assemble a really good management team and board. I've been in mining for about 25 years, various projects around the world in Mexico and Africa, and super pleased to be here in Quebec City, but also working in the province of Newfoundland. Ken Tiley joined us about 2 years ago. He came from McEwen Mining, a big company guy, working with big budgets, big teams, fantastic individual. Fiona's our CFO, fantastic CFO. Shanda's here in the audience. She joined about 2 years ago as well. Great background, working with different companies from IR and corporate development. And from a board perspective, we have Doug Cater. Doug Cater was the VP of Exploration for Kirkland Lake. Eric Sprott was the chair, and Doug was sort of the VPX. And he's one of the key individuals, the geologists that went down to look at Fosterville mine to do due diligence before they acquired that. And Fosterville is the highest grade, most profitable mine in the world because they found the Swan Zone. So Doug was part of that team. Great to have him on the board. Larry Short is a wealth manager in the province, knows everyone, wrote a book on wealth management, so tremendous guy. Siri does sustainability consulting, helps a lot of mid-tier companies in mining for ESG governance and sustainability. And Rod Husband is a sort of economic geologist, and he's a super smart guy and out in Vancouver. So more importantly, the guys on the ground. I honestly, I can't say enough about our team. They're all local. They're either from St. John's, Gander, Gambo, local areas. These are the guys that make it happen day in, day out. They love working in their own backyard in the province. Some used to work from away, and now they get to work here. So they know the area like the back of their hand. So how did the gold get there? So orogenic gold really just means mountain building process. So there's a number of faults that were created in the province of Newfoundland. And you can see as the pressure built up with tectonic plate action, there was sort of weakness in the rock, and these fluids were allowed to push up and bring the minerals like gold to the surface and near surface. So the one we're focused on most importantly is the Appleton Fault. Again, this is like the early days of the Abitibi because exploration really just started gaining traction here in the last 4 or 5 years. So the Appleton Fault is the key fault, but we're not finding the gold in the fault area, like in the black line. It's more in the blue lines beside it, because as the pressure drops and the heat falls, that's when gold kind of drops out of solution, and that's where we're finding the discoveries. So it's beautiful looking core. You can see here you got Newfound core on the left, you got Fosterville, again the most profitable high-grade mine in the world, and then you've got our first drill hole. beautiful looking quartz with stylites, gray stylites going through it, antimony, pyrite. There are some bugs, like a bit of cavities, if you will, or openings in the rock, and VG, visible gold. So it's just beautiful to see on the rack. So we're going to talk about Bullseye. Bullseye is a claim we picked up about a year and a half ago. We beat out like 100 competitors. Eric Sprott called me up the next day and said, how did you beat out everyone? And we just got good at staking because I think we had to be. These claims were coming up. We asked for guidance on how to get good, and we used a lot of different techniques, and we were very successful. In fact, I think our stock jumped from like 15 cents to 34 in a day when we got this. So we're very pleased to do this. But the second question he asked was, when can you drill? So we started drilling right near the Alperton Fault, and we just really, the first drill hole was just to see, where do we intersect this Alperton Fault? You're not quite sure exactly where the fault goes through your property. So super happy to have 14 grams over half a meter. You can see, again, quartz, the visible gold there is in green. So very pleased with that. Then we kept drilling, of course, hole number 5, almost 13 grams of gold over 4 meters. There's the core box you can see, again, VG. And hole 19 was our best hole, 38 grams over almost 3 meters, 55 flecks of gold in the quartz, some high-grade areas of 118 grams per ton, so very pleased. So I'm going to show you a video that kind of shows our first gold discovery, and hopefully it works. Yeah. So here's the Alperton Fault in black. Our Bullseye property is sort of like that upside down H. Here's our 30 drill holes that we put into Horseshoe, and it's open in all directions. We're going to spin around now and kind of see it in 3D. The red is sort of the interpreted gold lenses mineralization that we see based on the gold intercepts that we had. So very pleased to have that. But we're not quite sure if that is, there's lots of gold in the area, so we're not quite sure if that's the biggest and best one. Because literally after we announced our Horseshoe gold discovery, Newfound Gold came out with Everest, Jackpot, and K2. So our Bullseye property is in red here, and those sort of drill collars that you see are Newfound Gold's property there. So we're like saying, okay, well, Newfound Gold's doing a ton of work just south of us. Let's see where that leads us. And sure enough, you can see from the press releases, they've been really focused on this area. This is a picture of Google Earth back about a year from now. So you can imagine all the drilling they've done since that year has gone by. And what I can tell you is that Melissa Render, actually the VPX at Newfound, did a fantastic video on K2. K2 is getting bigger and better. It's sort of on the west side of the Alperton Fault. And then they came out with Honeypot, they came out with Vegas. So when I say this area is heating up, it's amazing to have 6, 7 gold discoveries in the last year. It was not here before last year. So we're focused on a few different areas. Even though we had one gold discovery, we've got A, B, C, D areas we're focused on. We're going to be targeting Area B because I'm going to show you, again, a short video to explain why we like it so much. So there's all these splays kind of coming off the Alperton Fault you see here in blue. And so what we see we've done kind of downhole televiewer, and you can see that certain splays are kind of lining up to being a little more high probability than others. So we're going to be focusing on this area here for our new drill program that we just announced on Monday. It's a small targeted drill program, only about 2,500 meters, but the plan is to be successful and then continue that up and follow it up as we get more directional vectoring on some of the new drill holes that we can follow up on. So that's the drilling program. Also, another thing that's happened the last couple months is we've gotten seismic information. Now, seismic is more used in oil and gas, but here what Newfound Gold has done, they spent about $10 million going down deep into the earth, about almost 8 kilometers. They've done 3D to about 3 kilometers. And what's important here is that when I explain orogenic gold, it comes from below. It's mountain building process. It's fluids coming up. So if you can imagine that if there's gold at surface, we have to sort of track where the source has come from. So that's really important to define. So we get the information for free from Newfound because they went over our property to get down to that depth. So we actually hired the same analyst, high size that they have, so we can get a good interpretation about where at depth the source of the gold could be. So we're meeting them weekly, and stay tuned for sort of a seismic interpretation on our property here. Oh, and also Televir, fantastic process. We just started doing this to help out because of all the kind of splays and fragments that's sort of where we're finding the gold. Directionally, we want to make sure that we're becoming more accurate. So it's basically a probe that goes down existing drill holes that uses sonar and other techniques to kind of see how the drill hole is unencumbered, if you will, or unfragmented. And it helps with the vectoring about where we want to place our next drill hole. So this has been very helpful in terms of our drill program that we just announced. And also gazebo. So far we've focused on the small property called Bullseye to the south, where all the action is happening, where everything's heating up. But gazebo is 7 kilometers along the Appleton Fault to the north. So we need to get to gazebo. We've been doing a lot of till sampling on it, looking for hot spots. We see a lot of gold grains in the soil, like 14 times more than background, which is great to see. We're advancing each of those kind of hot spots, getting better at it. And we're also, from a geophysical perspective, we see similar splays coming off the Appleton, like a feather, down south. So we think gazebo could be our $1 billion property, much like Newfound. Like we could put all of Newfound's 20 gold discoveries basically into our gazebo property. So we do want to get to gazebo, but Bullseye is the focus right now. So yeah, so the near-term catalyst for us is we announced a drill program. We'll probably kick that off mid-June. We'll have assays out probably late July, early August. We're looking at other areas, like I mentioned, K2 to the west, getting bigger and better. And then to the south there too, there could be like a parallel Appleton Fault kind of going through based on some of the seismic information that's come out. So we're very pleased to see sort of multiple faults kind of going through our Bullseye property. And also watch out for seismic. Gazebo, we're going to be advancing, doing more till sampling on. Stay tuned for some of those exploration programs. And yeah, the guys are there. They're there today doing some till sampling, making sure we can advance these properties, advance these targets around gazebo. So yeah, so I think we're doing everything we need to do to be successful in the beautiful province of Newfoundland. Great founding shareholders, well cashed up, great management team on the ground at corporate, great board. And so we've got all the ingredients to be successful. So I want to thank you very much.
Thank you, Jeff, for your presentation. And now, ladies and gentlemen, that ends all of the presentations for the conference. So great job to everyone. And now it gives me great pleasure to invite Osisko Mining and Glencore Canada to the stage as we announce the Student Sponsorship Case Study Awards. And at this time, it gives me great pleasure to announce the winning case study team. I know, a little bit of tension. It's all good. Okay, team number 10. Come to the stage, please. Team number 10, come to the stage, please. Please help me welcome Grant Liao, Philippe Marchand, Elizabeth Ouet, Aliong Jongkuch, Eva Lowen Samuels. Congratulations, team. Fantastic job.
Congratulations. minutes avec.
Ah, que j'en ai un plus grand que moi, je suis content.
We're going to announce the actual prize as well. And I'm going to let Mathieu and Alexis announce this together. Since you're all mic'd in.
So the prize for the winning team from Glencore is a visit to our urban mine that we have east of Montreal, the biggest producer of palladium, platinum, gold, copper, because we are in the recycling business big time. So with the CCR, so you will spend the morning visiting the plant, plus the precious metal plant of it, and a dinner. So that's a very special visit to the biggest urban mine we have in Canada.
And now, thank you. And now Mathieu Savard, president of OCISCO Mining, is going to talk about his prize, and he will also announce the Outstanding Student Award.
So the prize from OCISCO is to get to the office for a lunch, and where we'll have a nice session of lunch and learn and talk about the project and whatever question you might have about the mining industry as well. I had a speech though.
Oh.
Can I? Yeah. Okay, so first and foremost, congratulations to all the students who participated in that. That was really inspiring. I heard a lot of good comments. You had certainly a bunch of questions with different company leaders. That was really nice to see, because basically what we can see is the future of that industry. You will certainly drive the innovation and the sustainability of this industry in the future, and it's really exciting to see you guys coming in that business. You know, when we think about, you know, I told you before in the small speech we have prior to the competition. Of course, it's a competition. We had a great winning team, but it's a process that was designed to get to know each and every one of you. So everyone is a winner in that convention. Just to be the fact to be here, you get to know more the industry. Hopefully, it will shape your decision or your path for the future of you know, depending on if you want to become an engineer. It's fine. You know, not everyone can be a geologist. I understand that, but you know, it could shape your decision making. You know, should I get more skills in that specific field, for example? So hopefully you reach your goals there, and we are certainly pleased with what we've seen. And just to segue on, you know, on the outstanding students. So we have to pick someone. That was not an easy choice, but it is what it is at this point. So we pick a student that showed dedication throughout the full 4 days, that showed passion and teamwork. So this year, the outstanding student for OCISCO Mining is Elizabeth Ouellet.
Picture.
sorry, the prize is a training session with us, a stage, finally, with us at School Mining. So congratulations.
Thank you. Thank you. I don't want to repeat what has been said, but everybody is winning. The 50 students that participate, for me, they are winners, but also the mining industry. And thank you to Joanne to organize this. It's important for the mining industry to attract the best people we can. And it's important. It's part of our social involvement, I think, and thank you. We have 140,000 employees in the world, so it's more difficult to take decisions, so we picked 2. Sorry. And so Rim Faye. And Raphaël Dumont. And as they're not member of the winning team, they will join the winning team at the visit of CCR Refinery in Montreal. So. Thank you. Thank you very much. Just open like, yeah. Little picture. Bravo. Voilà vos invitations. Thank you.
Thank you, Mathieu and Alexis, and to all the students who did amazing work on your case study. Your dedication and hard work does not go unnoticed. And one final lesson to these students on perseverance. The only reason Glencore is here today is because I had the nerve to approach them at their booth at PDAC, complete cold call, and I thought, well, what can they, the worst that can happen is they can say no. And here we are today. So you have to take your chance when you have it. And also, while I'm standing here, I would like to give an amazing shout out to our friend Christy Kula from OIII Mining, who actually did the case study for us. Thank you, Chris. Well done, Chris. You've been helping us out for 3 years now, so, you know, it just gets better and hopefully easier every year. All right. Well, the next thing I'd like to announce is something that's very near and dear to my heart, is the recipient of this year's SHECO initiative. This year, IR Inc. will be donating $5,000 to The Circle. This is to Bishopfield Elementary School in Newfoundland. The school has created a circle for students who have experienced social or emotional needs, anxiety, trauma, grief, and loss. This is a school that is particularly recognized as a relationships-first restorative justice trained school, and it has an amazing team of trauma-informed staff. And I may say that this school has accepted children from Ukraine and Gaza who need help in the most visceral way. This school will be expanding its knowledge of First Nations culture and practices that are used to support holistic healing and connection. Sharing circles are often used in the school to help develop connection, oral language, and it represents balance, equality, wholeness, and connection, which is a major focus of the school. The drumming, chanting, and rhythmic movement is multisensory and helps these children release emotional trauma in a safe way. So, as usual, we welcome any assistance with any donations to this incredibly worthy project, and a portion of any of the paintings sold today by our resident artist, Bertrand Surmel, will also be going to support this amazing initiative. So, gentlemen, ladies, please buy a painting, or, you know, we're looking for matching donations from some of our big mining company supporters as well. So now, I'd really like to call it a wrap. It's been 3 days of unbelievable presentations, great networking. Our students, you know, you've done a great job. We are doing a conference here with a conscience. You know, it might not be the best business model yet, but it's the right thing to do business model. And I think that this year has been our breakthrough year. So thank you very much for supporting us again. We would like to thank all of our sponsors who have supported us, many of them new this year, but particularly the ones who have been with us for the past 3 years. And remember to save the date for next year, same place, same time, June 3rd to 5th, 2025. And so now, please join me for a drink in the Connect Lounge as we say adieu. Thank you very much, ladies and gentlemen.